Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live in studio, our senior economist, Tracy Shuchart. And joining us over there in Charleston, Jimmy Cagnina, our senior market strategist. Good morning.
Good morning, guys.
So, a headline just hit the tape not too long ago, Shy. Shed some light on what that was.
This morning we had announcement that China was going to respond to U.S. tariffs that are now at 104%, and they were raising theirs to the U.S. from 34% to 84%. And so that caused this morning, about an hour ago, kind of the market to puke. And then the other headline that came across that caused, a little bit of havoc was EU trade chief discussed parameters to lower tariffs with the U.S. So the market kind of spiked up on that, a mere 80 points, and then puked again.
Yeah, we're just getting used to it. I look at, this morning I wrote on my note, I tariff you more. I mean, this is like we're watching these negotiations firsthand here. It's kind of wild. We say this every day, but it's not calming really much at all. We talked about this yesterday. Maybe the market could see some price stability. And the key thing that I talked about yesterday morning, Jimmy, was bond markets. I said I wasn't surprised that the bond markets were selling off. I was surprised at the velocity that the bond markets were selling off. I saw more and more macro people throughout the day talk about this. I continue to think that that's going to be a very difficult road for stocks recovery if you've got bonds selling off the way that they are. 10-year yields this morning, 4.4%, almost 4.5. You've got 30-year just cannot hold a rally. And, so the long end just keeps going up, Shy. I mean, this is not good.
Well, and a lot of speculation is this is the hedge fund basis trade that is unwinding. So what this trade is, it's kind of a popular hedge fund strategy that profits from the difference between the cash price of treasuries and the futures price of treasuries. Now, because this is very, very small, they typically use massive amounts of leverage in this trade. And so what happens is when this starts to unwind and everybody's rushing to the door, this is what is causing huge problems in this market. So that's the biggest speculation of what's happening right now.
Jimmy, you're a bond guy back in the day. Talk to us about what you're seeing.
Yeah, so this morning I literally had to go. I went to the CME Group's website to see where the circuit breakers are for bonds and notes, because I don't know that I've ever seen it kick in, but we're like, it's 2 points for the notes right now. And it's for the 30-year, it's 4.5 notes. We're already halfway there in the 10-year notes right now. And if this keeps going on, it'll be we'll be breaking new ground there. But who knows? There's also a 10-year auction today. I think it's at 1 o'clock. It's for $38 billion in treasuries. We'll see if that goes anywhere quick. It'll be a good gauge on the appetite for 10-year notes, and it could definitely move the market even further in the wrong direction. There's a lot of these folks that are kind of going, trying to hedge in the swap with swaps, and that's also a dangerous path to go down. So there's nothing good going on right now in the 10-year notes or the 30-year bonds.
Yeah, and I was going to also mention we need to watch the auctions today. So far, the auctions on the shorter end have not gone very well this week. And so we have the 10-year auction today, which people obviously will be watching very carefully to see if it's disappointing or not.
I mean, are we really talking limit down in bonds here? I didn't even know there was a limit in bonds. I'll be perfectly honest with you. I really didn't.
So they call it, they call it dynamically calculated variant at the CME. It's a different kind of calculation that they use for this than they do for the regular, even the S&Ps and NASDAQ and stuff. And it's a bizarre thing. I had to refresh my memory this morning because I forgot all about it. But it's a thing, yeah.
Interesting. I mean, what a time to be in markets. Gold up 100 points this morning, Shy.
Yep, absolutely. Again, we are back to that safe haven trade where, where they're jumping into gold. We kind of had a couple days there where it was just sell everything, raise cash, take care of your margin calls. And now that we're, back near the lows, we're seeing precious metals bid this morning.
Yeah, silver's up 3%, gold up 3.25%, copper's getting a little bit of lift. I wrote in my note this morning as well. I mean, if you're looking to buy the dips, those are the markets you look at it in. I don't see this helping equities again at all.
Yeah, no, absolutely. And we've had, I also want to mention, we've had a lot of China headlines this morning. So not only are they raising tariffs, but they just put 6 entities on the unfriendly list for the U.S., and they sanctioned another 12. And they also told, or the PBOC basically told banks to reduce their dollar purchases. Now, yesterday on the chat, which I don't think anybody saw, but somebody asked a question about China, and I said, what I really think they'll do is devalue their currency. And then this morning, overnight, PBOC said they were going to stop their dollar purchases, which means that if they reduce their dollar purchases, that means they're going to they're not purchasing dollars to prop up their currency anymore, right? They're just going to let their currency slide. So it'll be a deval in the renminbi.
Eesh. Things just keep flying around right now. I mean,
crazy.
It's obviously for good morning chat, by the way. It's just way too much for day traders to even keep track of all of this, and I don't really think they should. I mean, we discuss it every morning. It's about building a theme for what's happening here, and the bottom line is there's just some big boy stuff going on right now that's going to throw this tape around. You see headlines that are going to continue to move the tape, but the underlying theme is stocks are out of favor, bonds are out of favor. Silver and gold remain in favor. We talk about where we started on Q1. That was one of the key points that I brought up. You look see where the flows were coming in. This was even before April 2nd, right? Liberation Day. How's that going, by the way? Hold my beer.
I'm not feeling very liberated.
Yeah. So understand that we don't need to understand this, but understand that what's happening, right? I mean, understand what's really going on behind the scenes. I always say look beyond the charts, and that's what we try to cover here in the morning. Chat, go ahead, Shai.
Yeah, even platinum group metals are catching a bid today. So it looks like, people are sort of running to the metals right now for some sort of safe haven. Copper would not be one of those considered a safe haven because it's more an economic indicator. If we're going to have a global recession, I think that, the idea is copper demand would be down. And so, be careful with that one. We may not have seen the lows yet on that unless we get some sort of tariff resolution. Again, the EU said this morning that they are willing to talk about lowering tariffs on the U.S., which would mean that likely the U.S. would lower tariffs on the EU. So again, it's going to be a headline-to-headline sort of trade until we get some sort of resolution. And I'm not really sure, unfortunately, how long that is going to last.
I don't see it anytime soon. I really don't. I mean, and I'm always half glass half full type guy. Yeah. But this just seems like everyone's remaining steady to what they are, and this is just going to have to play out. And, it is what it is. I mean, you're going to get these random headlines that might be slightly bullish, but unless they are, that's the one thing, unless they are real. First of all, there has to be a real headline.
Right.
I mean,
not somebody's talking to somebody.
Yeah. The other thing is it has to be a really impactful headline that actually the market can understand what comes of it next, right? Because a lot of these are, well, we might be doing this, or we're going to the table to discuss this. That might cause a pop, but ultimately that's not changing anything within it. And we'll be covering that throughout the day with Shai in chat. Jimmy, I want to get to you about the metals because look, if they're up What do you see into the metals markets?
Yeah, I mean, I think Tracy nailed it. I mean, I think there's finally a flight, a safe haven money flowing into gold, right? Gold has had, it was 100-point range over $100 range overnight, a huge range, and which is very unusual, right? This isn't a normal circumstance. But when you see gold getting back up to that 3,100 level, again, now we have kind of a little bit of conviction that we could keep moving up even further in gold if as this whole tariff stuff unwinds. If it does unwind, remember they have to not only do deals with all these countries supposedly, but there's going to be carve outs in the process. Well, could you kind of exempt me? Could you exempt us? Could you exempt them? And so now you even have like, Delta coming out with guidance this morning saying we don't want to give any guidance because we don't know what's going on. And that's not a good thing for anything. So I'm not surprised that folks are jumping into gold right now. And Peter Schiff is probably high-fiving everybody.
Oh yeah, he's loving this. Who knows? We might have Peter on the show sometime soon. Could happen.
That'd be great.
But today, who do we have on the show, Shai?
But today we have Jim Bianco. So that will be interesting. He also noted the unwind of the trade last night. He made a comment about it, so would love to get his view, as well as his view on just tariffs in general and Bitcoin, of course.
Yeah. Any data points today?
So we have wholesale inventories and wholesale trade sales, not a market mover. Then we also have at 10:30 a.m., we have crude oil out crappy. Came in last night at minus 1,000 barrels. The expectation today from EIA is plus 2.2 million barrels. So once again, we'll see what happens. But we did have a draw according to Crappy last night.
If you guys don't know what crappy is, so basically it's the API numbers, but she calls them crappy, CRAPI, because they're voluntary. I mean, it's
right.
I mean,
so and they often do not match anything near close to EIA. That's my little nickname for them.
So, chat, get the like button going this morning. Seeing a lot of people tuning into us every morning. We're super thankful. 10,000 people have subscribed to NinjaTrader Live since we announced it. That's pretty cool.
Amazing.
So we hit the 10,000 mark, I think, yesterday. So we appreciate all of you and really just look forward to continue to be with you guys every morning. Yesterday, I talked about the collar trade, and I said we can make a higher high by a little bit. I said roughly 50 points. And then you go back to that JP Morgan collar trade. Again, I looked at that this morning to see how close we got to that. It's amazing. That put spread in the SPX is 52.90 to 44.60. They sold the 58.80 calls. Why do I mention it? It's just because the top of that rally was the top of it was their put spread.
Right.
And it's like, again, is that a level I was watching? I was watching a level a little above there. I talked about that. But you're seeing like these bounces and how big they are, but how important bigger picture levels are. And we've talked about this with everybody. Everybody's pulling the charts back. Pharm, Tanya, pretty much everybody across the board. I know Kane was looking at a quarterly chart. We got Kane today too, by the way. It is Wednesday.
I know, and I'll get to deliver crude numbers again.
Yeah.
That should be good.
I know. I remember him looking at it. He was like, thanks, Shai.
I don't trade.
I don't know what I'm going to do with that. It was, but that was pretty funny. So yeah, in big day, we got Bianco, Kane. We've got some data. This data is going to be like, does it? I mean, does it even matter right now?
I don't really think. We've got PPI, or CPI tomorrow. That will matter. But a lot of this other data is not going to move. It's not going to move the market.
Last thing, we've got 30 seconds before we get to this morning's Edge report with Jimmy. Crude oil. It's getting
hammered.
Cracked. Do we talk about this? How much is this going to matter in the overall marketplace when you see oil? Why is oil down so much?
So because of recession fears, global recession fears, that's, you could say, it's Saudi Arabia because of, they are going to add that 411,000 barrels in May, which is triple what they had planned to do so. But, ultimately that's not a ton of oil. So this is mostly recessionary fears, and global demand down in oil is the first to go. And sentiment overall has been poor pretty much this entire year so far. And so it just keeps slip sliding away. So my levels under where it is now are, 50, I have 54.67 and then 50.96 below.
Got it. Well, we'll keep an eye on that. We're going to keep an eye on the charts here in just a moment. And when we come back from this morning's Hedge Report, we're going to have Jim Bianco. But until then, this morning's Hedge Report with Jim Cagnina.
All right, let's start with our favorite E-mini S&P chart right now. We had a 168-point range in overnight trading on over 500,000 contracts on the front month. Again, we're living in interesting times. These are unique times in which you're going to talk about this years from now. Remember when? And that's what's happening right now in the overnight markets. A lot of activity. Order book's still real thin, though, so you got to be careful if you're trading overnight. I do have the limit down numbers just in case. I don't have a good feeling about today. That 7% circuit breaker at 46.71 half, the 13% when we open, 43.72 half, and then the 20% at 40.2375. Let's hope things don't come to that. Right now, we're driving down to some put support at 4,900. And that's a Menthor Q level as well, along with their one-day min and one-day max numbers. S1 on the pivot held so far. And I was reading your report this morning, Deli, and you were talking about how technical analysis is kind of out the window right now when you have such wild news-driven events. And there's something to that. But the Menthor Q levels are pretty good. The pivot numbers are pretty good until they're not. Remember, we have S2, we have S3, we have all sorts of targets on the downside. So I want to kind of keep that in the frame of understanding of what possibly could happen here. On the upside, Jax 2, again, that gamma level at 50-50. When I'm thinking about trading in this type of market for the E-mini S&P, I'm thinking of 50-point increments. 50-point increments. In the old days, that would be absurd, right? You'd think in like 5 or 20-point increments, but now it's 50-point increments. So when I'm thinking about just the size of a regular candle, intraday candle, those kind of benchmarks are important. And you can see the gamma levels there as well. Let's just pivot over to the micro NASDAQ really quickly. And I know I have a lot of lines on this chart, and I have the same circuit breaker numbers. I'm going to read them out loud again. Let me just adjust the chart a little bit better so everybody can see the levels. The 7% Globex level is at 16,047 quarter, 13% at 15,021 and 3/4, and the 20% at 13,825.50. Right now, that Menthor Q one-day min is perfectly acting as support. You can see that little rally we had in the London session, the London Open. We did have a rally. It brought us up to approximately a peak of 17,426. We have that Jax 1 level surprisingly higher now at 17,500. We're still in a negative gamma situation, and we have that pivot right next to it. So there's two areas of interest on the top side if some good news pops out of anywhere. So right now, though, we're at the 0 DTE put support level, and that kind of frames that conversation. We have not hit S1 yet, but that's definitely going to be a short-term target for me. Blind spot 2, and then S2 all the way down here. Around 16,100 if we do fall out of bed, which a lot of folks are suggesting. Let's just shoot over to gold, though, because as we mentioned, that was a crazy, look at this. It's still going. It's still going. When you look at this in terms of percent, one day percent over 3.5% on a night Globex move on 137,000 contracts. So this market's not immune to the excitement. We have that the high vol level. It's a 0 DT vol level at 30.90. And then let's see, we have another Jax Menthor Q level around 30.25, kind of right in the middle. The volume profile, forget about it. It's out the window. There's too much uncertainty here to have some kind of point price happiness in any of these markets, to be honest with you. So on the upside for gold, we have R3, which is rare, and that's around 31.06. This level higher here is a remnant. It's probably a PAX level. I'm not sure why that's on my screen. Let's go over to the 10-year notes really quickly here, so we can get to Jim Bianco here in a second. But this is, again, we have these dynamically calculated variant circuit breakers. I don't expect to get to them. I've never seen us ever get to them. But if we are going to ever, it will be on a day like today. Right now, the bottom here, this put support level is kind of holding pretty nice at 110 even. This is the 10-year notes, folks. The Jax level on the top here, the main Jax 1 at 111 half. That's kind of framing the top part of the conversation. But really, we've kind of condensed the area of resistance down to approximately that Jax 3 level, which is 111 even. So and the volume profile here is interesting. We have, how much volume do we have? We have 1.8 million contracts traded already, and we have a really nice point of control here as well. So that's at my radar screen, just in case things kind of ease off a little bit. This point of control, it'll be dynamic, it'll move around, but a lot of volume was traded there overnight. That is the Edge report. Back to you, Deli and Shai.
Thank you so much, Jim, and good morning, Jim Bianco. Jim, long time no see. How are you doing?
I'm doing fine. How are you guys doing?
We're doing great. We've only got a short amount of time with you this morning, so I want to dig right into it. Jim, help us understand what's going on here. We have equities we all know is getting cracked. Gold's up 100 today. The bond market just can't hold a bid. Talk to us about what you're seeing.
You know, I'm in California. I woke up early so you guys would tell me what was going on in these markets because I'm just as confused as everybody else at this point. You know, this is some kind of a structural unwind that's going on in all these markets, whether you're talking about the crack up in crude oil or in the bond market or of everything else. That's, you know, I think things are breaking down. I think in the bond market, to be more specific, I think that the basis trade, which we've all know is a huge trade, which is a gigantic driver of the market, is finally starting to be unwound. Now that I've said that, I don't have any specifics on a roadmap of how this is going to happen because no one has specifics on these things. And the other thing I'll say too is that whenever you get into chaotic markets like this, I would argue to you that maybe I'm too online, but everybody goes, who's making money? And the answer is nobody's making money. The question is, not only are they losing money, who's going to still be in business in a week? That's really the question we need to be asking, not who's profiting off of this. Now that I've said all that, let me offer you a big picture what's going on. We are in an inflationary environment, and there's been an enormous amount of resistance in the financial markets and in the economic community to accept that. Now, why does that matter? Because we structure all of everything we do around the idea that we don't have inflation and that when markets get chaotic, the Fed will print money and drop rates to zero and fix it. Well, if you're in an inflationary environment and you get into chaotic markets, the worst thing that could happen is the Fed drop rates to zero and fix it because they're just going to feed the problem. They're not going to resolve the problem. And I think that realization is starting to come. I think what's happened with the basis trade is if you look over at the Fed fund futures, just as one example, it's as of 2 minutes ago, it's giving a 56% chance the Fed's going to cut rates at the May 7th meeting. 56. That's a coin toss that in 3 weeks you might get one rate cut. Now, we should be at 356 right now. We should be talking about an emergency meeting this morning. Not that there's a coin toss that we're going to have a cut in 3 weeks. And the reason I think the market is pricing that is there's this realization that part of the problem is we're in an inflationary environment, meaning we can't print our way out of this. We can't go to zero on our way out of this problem. And now that is kind of slapped everybody in the face, from crude oil to the bond market to the stock market and everything else. As far as tariffs go, we were set up for this. You know, there is no one thing that causes something like this to happen. Maybe tariffs were the trigger, and I do think they were the trigger to cause to see this cascade that we've had in markets. But this is years in setting up unbalanced markets that were unprepared for some kind of a shock like tariffs. And if it wasn't going to be the tariff announcement, something was going to come along that was going to cause this to happen. I hope that makes sense, but it's hard to make sense out of, what's going on in these markets with the speed and the magnitude of these moves.
I got one quick question before we get to Shai's question. Do you really think that a rate cut, an emergency rate cut, would do much of anything in this environment right now?
No, I think it'd make it worse. I think it would make it worse if they were to do a rate cut. Because what you're signaling to the market with a rate cut is go in hard and speculate, and the Fed, will make sure you make money. I don't think they can make that promise that they can make these markets stop going down. So by encouraging even more speculators to pile into this market, you just make the unwind worse on the other side of the equation. And again, why won't a rate cut work? Why are we like this? Because we assumed in everything we've done, there is no inflation. The Fed can always go to zero. They can't anymore. That is an old era. We're in a new era. And that's why I don't think that fix will work this time.
And Jim, as far as inflation, yes, we are still seeing inflation. It's very sticky inflation. But then a lot of people look to the commodity markets and say, well, we have energy down, we have metals down, industrial metals down, everything's fixed. So, what do you say to that? And, do kind of the commodities markets cracking right now, will that have any effect on inflation?
Yeah, I mean, you just don't have the energy markets down. You have them down. The second biggest move over a week that we've ever seen. The only other one was the minus $40 in 2020. You've got the Bloomberg Commodity Index down 9% in 3 days. There's only been, I think, like 2 other moves like that in the last 25 years that you've seen commodities crack that hard over a few days. I would say the first thing you need to understand about the commodity markets is do not think that they're over at Trafigura or they're at Cargill or any of the other spots with their economists making a judgment about what is going to be the demand for commodities next year, which has caused the commodity index to fall 9%. A lot of this is electronic trading, is algo trading that was based on a certain set of assumptions on how the world works. And they're coming to the realization those assumptions were wrong. And now they're starting to unwind those positions. So once this problem gets behind us, we'll see a settling out of the commodity markets. And then we'll get a true gauge of where we are in terms of those markets. Now, as far as the inflation story goes, remember, I mean, CPI, we're talking about CPI inflation. CPI inflation is looking to be going to go vertical in the next couple of months because tariffs are going to cause it to go vertical. CPI inflation is also majority services. Commodities are a small input into that process. Commodities have always been a good tell as to where inflation is going to go because it was the Trafigura and Cargill economists talking to their traders, making judgments about the future. But that's not what we've got going on in this market right now. So maybe in a couple of weeks, we could see where the commodity markets shake out and see what their sentiment is about inflation. But right now, I think we have an inflation problem. And I think we have also a financial plumbing problem, which is showing up in the commodity markets.
So where does this put the Fed right now? I mean, the markets are pricing in almost five cuts this year alone. And yet we still have Powell, pretty hawkish, or at least more hawkish than the market is factoring in. So where does this put the Fed, and what can they do, if anything?
Yeah, so the market's pricing in 5 rate cuts over the next year, and it's pricing in an even money chance of a rate cut on May 7th. Now, that doesn't seem to make any sense, right? If you're going to do 5 rate cuts in the next year, why are you going to wait potentially till June until your first rate cut? This is going to be over with. I mean, this is going to be a postmortem by June if we're not careful. First of all, I would say the 5 rate cuts by June, if you got a magic 8 ball, it's probably a better indicator than that. That that has historically not been a very good indicator. In November, or in September of last year when the Fed cut, it was pricing in 9 rate cuts over the next year. How's that working out for us? We did 4 and we stopped in December. So that is usually not like I said, that's interesting that the market's pricing in that much, but it doesn't mean a whole lot. I think what means a whole lot is the 50-50 on the May meeting. I can't emphasize it enough. We should be 50-50 on an emergency rate cut today if this was a pre-2020 type of environment that we had this happen, or a 2020 type of environment. Not 50-50 in 3.5 weeks that you might see a rate cut. And it goes to the Fed can't do anything in this environment about this. Is not a problem that cheap money will fix. The cause of this problem was too much cheap money. So, you can't drink yourself sober. You can't out-speculate a speculative unwind. And that's what I think we're seeing in this market right now. So I think the Fed's on the sidelines here, and they should be on the sidelines. If they want to step in with QE and try and support the bond market by pushing up the prices, if they want to cut rates and encourage lower borrowing costs for leverage traders to step into the market, they risk a worse reaction than September. In September, when they cut rates 50 basis points on September 18th, I think they did that because they panicked off the QEW revision down in the payroll report and the Pharm rules supposedly triggering a recession because of the rise in the unemployment rate. The 10-year yield went straight up 100 basis points right after that cut. We hadn't seen any kind of move like that in 40 years. It was the market completely rejecting the idea that lower rates was what was needed. We have an inflation problem. I actually think, I know this is going to be a heretical thought, I actually think if you want to get past this, they should be raising rates today. But I understand that that's not going to be in the cards. But, so I'll just throw that out there, that is as a theoretical, that they should be raising rates. Because I think the problem is rates are too low, and we need to get rates at the proper level with all the level of inflation that we really have in this environment. We should be closer to 5% on the funds rate, not 4.25%. But that said, I understand that's not on the cards. There's no way that that's going to happen. So I don't think the Fed could do anything. And I think if they cut rates or try QE, they risk the market really rejecting the bond market even worse, because they're going to say you're just in an era of tariffs and you're going to start printing. We're going to go right back to 9% on the CPI. And I don't want anything to do with the bond market if that's what happens. I hope they don't cut rates.
So, Jim, we only have a couple minutes left with you, and I want to get to 2 quick questions with you. One is, the market is desperate for a bullish headline right now. Trump has stayed steady. Percent has stayed steady. They're staying the path. What do you see possibly that could give this market some stability? I mean, we know he's not going to say the 90-day hold that everyone's talking about with tariffs, but what are some things that we could look at that potentially come out that say, okay, we might have some of this behind us?
So I'll say this, we tend in the United States to view this as, we have a problem, everybody else is stationary. I think every other country, especially Mexico, especially Canada, and especially Europe and China, are under even more pressure than us. That their markets, their economic outlooks are worse than ours because of these tariffs. So they've got every incentive to come to the table as well, too. They just can't sit there and laugh at us and go, the orange man screwed this up, and watch him try and get out of this. No, you're going down too. So I think the best option we have is you take one of the friendlier countries to our tariffs, Argentina, Israel, Vietnam, and announce a deal. Announce a deal with one of those countries, and maybe the market will look at it and go, oh, here's a roadmap for everybody else to kind of follow. Doesn't have to be exactly the same, so that they can kind of come to a deal. And then we kind of reduce the level of tariffs overall, and we get beyond this. That's the only thing I could think of, short of being forced basically to, pull back on these tariffs. Now, the reason I think that's going to happen, again, is how much more can we take with these markets, with these tariffs? How much more can Europe take? How much more can Canada take? How much more can Mexico take? Like I said, I think they're in worse positions than us, and they might be forced to just come to the table, or Argentina or Israel or Vietnam. They might be forced to come to the table and do a deal for their own self-preservation, not just to kind of quote bail out Trump. That short of a complete, redo of saying that, there will be a 90-day pause or something like that. That's probably the best option, and it's not a very good one. So yeah, that's why the markets are the way that they are right now.
Show one win. That's what the market needs to see, right? Just show one win.
Exactly.
And we're out of time, Jim, but I want to, right? And we're out of time, and I know this might not be, you might not be able to answer this quickly, but I can't have you on here without asking you, where does Bitcoin fit in this whole equation here?
I'll make it real quick. Bitcoin's a speculative asset, and it's going down with all of the other speculation. Bitcoin is really failing on its store of value. Gold is the store of value. Too many speculators in Bitcoin. I guess if we get rid of more of them, it'll start to take on the store of value type of framework.
More to talk about with Jim Bianco in the future. Jim, you're the best. Thank you
Thanks,
so
Jim.
much for taking the time with us.
Thank you, guys.
We really
Talk to you later.
appreciate it. Thank you. All right, Shai, that was great.
Yep.
Great
He's
insight by Jim.
fantastic.
He is. He's great. He lays it out. I hope all of you traders took a lot from that. I know I did. I love Jim, and follow him on X and learn more about what he's doing with Bianco Research. Now we're going to move on to Pharm, Shai. And Shai always talks to me about what Pharm is wearing with his shirt. So we're going to see here in about 1 second. All right. Next up, everybody, Tape Talk with Pharm. We're going to get to some charts. Good morning, Pharm. How are you?
I'm doing well. How about yourself, Deli?
Quick reactions. I know that you were in for most of that with Jim Bianco. What were your thoughts about what you heard from him?
Yeah, I mean, the Fed is definitely in a tough spot right now, and their latest reaction function to the administration and some of the changes just didn't make that any easier. So, the Fed is just really in this tough spot because, we do have some persistent and sticky inflation. At the same time, we are having some risks to growth. And that's just not a good mixture for equities, I don't think. So there's not really a very good solution. They probably should have been a little bit more aggressive, I think. And kind of, again, I'm just a price monkey, but I feel like they probably should have been a little more aggressive with asset runoff, perhaps been a little bit more active, just gotten the job done a little bit more quickly in 2022. It would have been nasty. We would not have held 3,500 probably, but we would be past it perhaps if they had just sort of done the job right the first time, I feel like. So that's kind of where I'm at, and now we're just kind of stuck. I'm not sure there's a good solution.
No doubt. And I think one of the things that all traders can take from what Jim said today is that the only real headline, because we keep seeing, we saw rumors, we've seen some things at the tape, is that we need one win, right? If we see one win with the tariffs to where it's with a small country, something that has made progress, and people can see the light beyond the tunnel, that might create some price stability in stocks because people can start to see how this is going to pan out. Right now, no one knows that, and that's why I think we're continuing like this free-for-all type mode. I think that's extremely important for everyone to understand, is that there's not this underlying put, as we've talked about it. Like they're not going to come in and just change rhetoric tomorrow. They've already said that, and this is why I think we're seeing this. And again, for most traders, 99% of the traders in here are short-term day traders. This is not going to matter to them really in the super short term what they're doing, but understand this market environment and just be aware of it. It's all about awareness, right? And so let's take a look at the charts here with me this morning. We'll start here. 30-year bond. I started with this yesterday. It was funny, Pharm. I was talking about it, and I saw a lot of macro people on Twitter continue to talk about it. Not like they needed it. It was like I did anything first or nothing, but it was like good to see the reinforcement of the fact that the bond market, I felt yesterday, as I talked with you, was the big story. I led with it yesterday. I lead with it again today. Again, it's not that I'm surprised that bonds are going down. It's the velocity that they're going down at, right? And, I look at this chart, and it's just like, man, they cannot hold a bid. I mean, right now they're trying to ever so slightly on the 30s. but every rally has been sold, and it's just hard for me to see a world where equities can catch a bid if the bond market continues to fall. Rates are going up. It's just not that good of a. It's just not a good environment for stocks to thrive in. You look this morning at 10-year, 4.43 in 10s. Look at these. Look at this chart in 10s, Pharm. I mean, this is the 10-year yield, and the 10-year yield was at 3.8 just a few sessions ago. 2 sessions ago, it's at almost 4.5. It's a big move. Okay, everybody, it's a big move, and it's something to take note. Also, want to go to, silver is only up 1.5% now, but silver continues to have this underlying bid in it because Tracy has talked about there's a supply issue in silver, and you and I talked about this at the beginning of the quarter. Flows were coming into metals, silver and gold. You continue to see that theme, and I think that theme again supports that if silver and gold are up, I don't necessarily see that being too bullish for stocks. Yes, we can rally with silver or gold up, but again, I look at this and say it's not telling me we found any sort of a bottom if you look outside of what's happening with equities. And then when I look at gold today, it was up almost 100. It's given back some, up 2.5%. Gold is more range bound than anything, but again, it's showing that when the market really gets weak, that gold comes in as a bid. And so keep an eye on that as well. I just continue to talk about market awareness. That's what I go over that for. Now, this morning, when I look at the charts, here's what I see. Yesterday, everybody, I talked about it. Well, 2 days ago, hard to believe it's Wednesday already, but, we talked about the possibilities of a rally, right? Then yesterday, you and I talked about, wow, this rally's got a lot of froth on it. You and I were both saying we'd like to see a move higher to sell. It didn't quite get to the prices that I wanted to get short, but ultimately the market made a little bit of a higher high and then rotated back down. What I talked about this morning was the SPX put spread for the JP Morgan collar, and that's 52.90, 44.60. So basically, they bought the 52.90 put, sold the 44.60. They think that there's a likelihood that we close in this range. If you go yesterday and look at SPX, it's pretty much right near the high of the day. So, I mean, they kind of know what they're doing, everybody. So, again, when you look at it from a bigger picture and you spread it out a little bit, and you and I have talked about this, understand that this is a big boys game right now, and you have to kind of keep an eye of what's happening here. And I thought that was really of note. Their bottom puts 44.60. Do we go from the top to the bottom, Pharm? I'm going to get to the charts and say I actually think that that's possible. If we don't hold 49.10 this morning, man, I just think it's ugly, Pharm. I mean, for me this morning, 49.10, and when I looked at my beacon stuff this morning, 50, 67, 65 to 49.10. That's the range I think that we're going to be boxed out in for a sideways day. But below an hourly close below 49.10, I've got 4,700. I think it's possible. If we were to get above 50.65 this morning on an hourly close, then I do think that there's a possibility of us going right back up to somewhere around 52.20. That's what I see across the board for B today. Hopefully I laid the landscape for everybody, but for me this morning, 49.10 is huge. We don't hold that in the first 30 minutes to hour, and we see 30-minute or hourly closes below that. I just think it's new lows for the year. That's what I've got.
Yeah, I mean, you mentioned the move in bonds. I mean, it's downright horrifying, honestly. I mean, it's spooky. And I've been bearish equities for a while, and I mean, like I don't like seeing this. It's definitely some of the ugliest action across markets that I really recall, to be honest. So doesn't feel good. But yeah, a lot of the viewers are going to be day traders mostly. I mean, many of us and most of us probably do have long-term accounts that we manage as well. But yeah, for me, focusing on day trading, I'm not trying to swing this anymore. I swung some on the way down, and we talked about that, swinging it short on the way down. And then just at some point, it's just time to close up shop and just day trade. There's too much headline risk, et cetera. But, we did have that gap up yesterday, and we talked about, I didn't feel like we had really seen enough accumulation down here in the lows of what seems to be forming out as a range to have a chance to lift those highs. And so I just kind of like put a rectangle around, what is actually the last 3 days. If you look at a cash hours only chart, Friday's high was roughly equal with yesterday's. So you've got sort of a clustering of highs. That's going to be kind of your top of range, right around 5,300, 5,310. And, the bottom is not as well defined, right? And what I'm seeing overnight that's interesting is, it seems like equities had every reason to just trigger the breakers last night, really. We took out yesterday's low. We came down and we tested Monday's low, didn't even quite get there. And we saw covers and a bid. And so I'm still open to the possibility that this could just, sort of range out further. Maybe we build another couple of days in this range and see some accumulation off these lows. I'm open to that because, I have to keep in mind that, big picture, this is still a back test of the 3-year breakout, right? 2022 all-time highs was, 4808, what have you. And this has sort of been a partial back test of that. So I'm going to remain open-minded that this could potentially just end in further accumulation in this range and give me what I was looking for, prior to yesterday's move. I said I didn't like it because we had not seen that take place. So if I get another couple of days in this range, and then maybe later on this week, sellers make an attempt to push to new lows, they get stuffed, we come back into range, it could still end up being a decent long. So I'm trying to remain open to that. Again, really, I feel like sellers have had every opportunity now below yesterday's low, and they've somewhat struggled, it seems. So I find that interesting. We got the China news this morning, more China news now that they're on, whatever it is, 8,000% tariffs and retaliation. Who knows? And it didn't even get to the overnight low. So
Yeah, it did.
We'll see. We'll see. Cash hours, fresh participants. We'll see what happens when they come in, and maybe they'll just take it straight to hell, right? But for now, we still are in range. We're certainly well within the Sunday night low. Again, we did not take the cash hours low from Monday, and we're just sort of still building out this range. It certainly is not a clear, balance as it, maybe looked like it could develop into. We're getting some distinct distributions now on the profile. And so you can see the overnight high sits sort of in between these two, right? And so that's common. So you had mentioned 65, and I agree with that. You could use the overnight high as like a proxy, but, to me, I'm cautious, that we come up here and, peak above the overnight high and then just fail back down. So I like roughly 65, basically basing back above some of this volume in here, I think, gives bulls a chance to lift this back to the highs. But again, if I'm bullish, I would like to see some cash hours accumulation down here. I would like to see continued, persistent selling, and it just continue to be met with buyers sitting ideally passive. And that's kind of, again, what happened on the latest China news. It seems to have been met. So remaining open again to that big picture, it's 3-year back test. We still haven't broken, Monday's lows. We still have not got back into, the range of those 3 years. So we'll see. We got a lot of data this week, obviously. And that could change a lot. I don't feel like this is about data right now. So to me, I'm just looking to see if maybe sellers can trap themselves offsides in the next couple of days after some solid accumulation here. I may try to swing long again. I mentioned yesterday that I was swing long on that pre-market rally, and I still hated it because I didn't think it was going to sustain. And it didn't. And, once we sort of saw buyers get above the prior day's high and they just got soaked, and then sellers just dumped them at 10:30. It was kind of lights out. So, again, maybe if we can get some better accumulation down here, trap some sellers, we have a little better chance of holding things in here.
So we're running a little short on time today, you and I, because we had Bianco earlier. I want to get right into the trade plan today for you. I think what you and I are laying out, I mean, I think that most people can see this on their charts. The overnight low is important. The overnight high is important. If we start to break out from either one of those, you could see some extension. Talk to us about how you would execute that. So just give us some scenarios for this morning's trade.
Yeah, I think that makes it pretty straightforward if you're using the overnight high and the overnight low. You do have the prior day low as well. Again, so far, in pre-market, we've kind of sat below it a couple of times, and then sellers just got lifted. So I'm not looking to chase a short necessarily below yesterday's low, right? I would look to potentially sell pops. You've got a spot right around 49.93. That was, if I zoom out, that was yesterday's spike base. So what a spike is just, the last 30 minutes of trade outside the existing range of the day. And so we had a prior low of day before that, and then we kind of knifed down through. And so 93 was the prior low. And so that'll be relevant to see, buyers need to continue to defend and then potentially reclaim, these 90s. And I was calling it something like 87 to 92 maybe, but call it 93. Then they can retest the overnight high. And so I mentioned a minute ago, I would potentially be looking for any kind of a sweep and fail of the overnight high, sort of like the plan was for yesterday with prior day's high. Similar type of a trade. If you see some absorption come in, above the overnight high and sort of below that 65, maybe even up to 70 spot, then you could look for a rotation back down to 93 and then sort of back into yesterday's low, which was, 49.40-ish, which is right here. And so you can see, like, so far, I mean, sellers made an attempt below yesterday's low, snapped, another attempt snapped, another attempt snapped. So, I mean, at least as of right now, that's not a whole lot of conviction below a prior day's low. So how low are they going to take us? Completely different set of participants during cash potentially. So we'll remain open to that. But I like, sweeps of, now we have a relative equal low with a current overnight low and Monday's low, I guess it would be. So same type of thing. If we come down and we peak below there, there's a lack of conviction from sellers. We reverse back in range. Then I'm potentially looking to take that the other way. So I really want to stick to probably the edges of the overnight range for today. Potentially scalps in between. Maybe 93s continue to remain offered after this. But again, I'm saying this is a bear. I love to short. This selling on China was just met. Show me something at open from sellers to convince me to get really bared up for a breaker, which isn't, again, entirely possible that they just come in at cash and just sell this to hell. But for now, I'm not as bearish as I was actually at the highs yesterday. I was very bearish at the high of day yesterday, and I'm less bearish now seeing some of this just lack of conviction so far. And I want to see if that translates into cash.
It's funny. I was watching the overnight open last night, and the tape was really loose again. I looked at it and said, man, this thing could just go. And you're right. They keep defending it. There is some buyers down here that just keep this market from getting too far from below this 4,900 area. And again, technically this morning I have 49.10. So I look at this and just say it really is key. Again, prove it to us, right? I mean, right now, I completely agree with you. It's like if we, for my stuff, if we hold above 49.10, what I see is right back up to 50.50 or 50.65. If we can get above 50.65, we go right back up to, what did I say, 52.20-ish. I mean, let's face it. In this market, that's a regular rotation now. In order for me to be really bearish, is a 30-minute or, I would like to see the first 30 minutes. If it were to close below 49.10, then I would say it opens it up to, it depends where we close, but it opens us up to 4,700, right? 200 points almost. I think that's ultimately what I see. Again, you're right. And it's interesting because it really is a tale of, and we'll get to this even with Tanya and Kane. They talk about Asia, London. It's a tale of three different tapes a lot lately. And so those lows are very key points because especially with this is a global issue, right? This is not just a U.S. issue. We heard Jim Bianco talk about this. This is not just saying, oh, the U.S. is dealing with this problem. Everybody is kind of trying to figure this out. So you've got different participants in each session with different things that they have to do or want to do, right? And so when you look at today, what does the U.S. market want? You know, it's going to be, I think it's going to be a super busy day. Tomorrow's CPI. I do think that in some ways does pump the brakes possibly for a too extreme of a move, but I mean, come on, man. Who knows right now? You're seeing a little lift right now. We just had what did we just have, a 50-point rally in the last 2-3 minutes?
Yeah, no big deal,
about
right?
it.
Yeah, 50 handle ranges in 5 minutes. I mean, left and right. I mean, yeah, talk about size down. I mean, I think a third size is fine, right? Like not even half size. Third size works for me in this environment because, yeah, there are times where you might not even have your stop set, and all of a sudden, you know, you're trying to click a button to set a stop if you don't have them, you know, programmed automatically once you execute. You know, you could get caught and be down 10 before you know it, you know, and then 50 handle ranges in 5 minutes, no big deal, right? So.
Yeah, and hello, chat. And we're seeing our boy T Trades is in there. He's saying 17,000 looks 500 primed in NQ. I've got 17,430 as long as we were holding really above like 16.9-ish. Again, let the market prove to us what's going to do today. I think that, I mean, it could be all of the above, Pharm. That's the other thing. Let's face it. It could be all of the above. Yesterday, from the overnight into the regular session, was all of the above. This can continue to be the case. It's one of those things where I don't think that you need to be too biased in any one direction right now. Let the market prove to you which side it's going to carry more weight, and you're getting follow through. You don't need to over anticipate anything right now. You're going to get the prices that you want if you believe in your preparation when they get there. I mean, there's likelihood of them getting there. You don't need to chase into a rally or chase into a break unless there's reason to do that.
Yeah, I mean, there's definitely a psychological component here. I mean, there was a lot of people that felt like, you know, yesterday morning, they're like, oh man, I missed the bottom, right? And then the same people in the afternoon are like, oh man, I missed the top, right? I mean, that's how wild it's been right now. Like, just chill out. You know, there's a lot of headline risk here. You know, make your trades. I just really think day trading is the way to go right now. Yes, you know, this is a very, very key technical area to potentially put in a major low, but it's also a very different market right now. And to me, we're not going anywhere until there's some kind of change in policy, at least some kind of an announcement. I like what you said about, you know, just get some wins, right? Just get some wins on the board. There's a couple of countries that would just be perfect for that. Just get them out there, make a deal. And, you know, makes everybody feel maybe a little bit better because, you know, I would love for this low roughly to hold. I would like for us to hold this back test, even if we sweep it, head to 48.20s, 48.15 on ES real quick for a trap. I would like for this to hold and give us a enormous rally. It would give everybody a little bit of relief. And then frankly, I'd probably lean back in on the short side later on.
Yeah, I mean, unless we get real resolve, and I think one country win would be a very positive headline for the market, I have no doubt. But I see this volatility ongoing right now. I think there's a lot to be, you know, pulled back here over time. And really every macro expert that I look at is saying that, you know, the ones that are very open-minded about the situation, right? There's not going to be closure tomorrow on this. And for day traders, again, this creates a massive opportunity. It all comes down to staying patient, be small, be smart. I write this all the time. You know your risk before you're getting into your trade. These are so important. Make sure you're working stops. You know, this market is going to give you opportunity. Make sure you're around to grab it when it gets there. Do not need to over anticipate anything in this because what you never think could happen is happening in 5 minutes. I mean, that's just the reality of it, right? If yesterday you said, I want to buy a dip, and the market was going higher and you chased it higher, you got run over. If you wanted to wait to buy a dip, you got a chance. Didn't work out, but ultimately you got a chance. If you wanted to sell a rally overnight, you got that rally to sell overnight. So don't think that anything can't happen, because it will happen. Just make sure you're in the position to be able to do it. Any last words, Pharm, before we let you go today?
No, I'm just anxious to see, what cash does and if sellers come in and decide they're going to stop this or not. Because again, right now it doesn't feel like they're going to, and that's very interesting to me. I didn't expect to feel that way or wake up to, such hesitancy on their part down here. So very interested to see.
I completely agree. Thank you so much, my brother. Pharm Navy, give him the thumbs up. Hit that like button for our guy Pharm, who's here with us Monday through Thursday from basically 8:30 to 9. Pharm, thank you so much, and I will see you tomorrow.
We'll see you, Dylan. Take care.
Next up, Tanya Army. Hit that like button for your girl, our girl, Tanya. Let's bring in Tanya Trades for Tanya's morning outlook. Tanya, good morning. We got Tanya on mute, I think.
Yeah, I was on mute. Good morning. What a beautiful day to read price action. Woo! Here we are, near
It
Monday's
does. Yeah, all right. Let's take a look right away at what you have. Let's talk to us about what you're seeing on the charts for today.
Yeah, so I mean, what day is today? Today's Wednesday, day before CPI. Yesterday was quite a large range. We pretty much called it quite well here, where I said I would be looking for if ES took out yesterday's high and NQ did not, which it did not. We have a divergence there. That provided a nice reversal there, and then it was confirmed for a lot of downside, right? We started off like up, what was it? We started off, I think, up 3.5% on NQ, and then we rallied to up 4%, and then we ended the day down 3%, right? So crazy ranges we're dealing with nowadays. And yeah, I don't see us stopping. I see us going for lower, honestly. This is kind of reminding me of Thursday, that the day before NFP was also a wild market, and we started reversing and going lower, and then NFP just continued it. I think that could also happen today, the day before CPI, if we start breaking down. Like, typically I actually don't really love trading the day before CPI. It's typically a smaller range day, and it builds liquidity for CPI to have a massive move. But all things considered, looking at how the daily chart is forming, we have that divergence yesterday at the high, previous day high, and then we had confirmation, right, to the downside, and we just melted through all the levels, all the support levels that I had marked out. I see more downside coming, and this market is pretty much like short the pops, short the rally market, and I'm not going to be trying to fade that, really. So we have that divergence at the high. Let me go to the 4-hour on NQ as well. Let's see here. So we completely, we broke down. We also, what I noted is that we came down into this 4-hour. This is like my last target yesterday, essentially. And we closed below this. So it's not looking like structure's holding up. I do anticipate these lows to get taken, which is Monday's lows, yeah. And right now we retraced up into this 4-hour fair value gap. I would probably, I would take the fib of this. Let's see here. So we didn't retrace into 50% of this yet. I think that we could. And we could, I would really prefer us if in the morning we have another type of rally, like similar to yesterday. Morning, let's see. I think, we pumped up like, wow. We pumped up 400 points since 8 a.m. That's kind of crazy. Okay. This market's just so funny. You're anticipating like 1,000-point ranges on the day, right? I looked at the ATR yesterday, and yeah, for NQ, it's about 1,000-point range for the last 5 days. So, bracing yourself for that and properly sizing is super important. But I do actually, yeah, I would like it. I would like the market to take out this pre-market high and then sort of, yeah, pre-market high, maybe rally into here 50%, or even it could retrace a bit deeper, but it doesn't have to. I would anticipate that, or maybe there's a divergence of ES with where NQ takes out the high, ES doesn't. I always look at that. I would appreciate that, yeah. And then for us to go lower from there. Again, like I said, tomorrow is CPI. That's my favorite day of the month to trade personally. Because it just provides large ranges and like the reversals are clean and continuous. It always respects, if it's going lower, it respects those swing highs, makes lower highs and such like that. So, and then it's a faster move. But like in this market, typically, my normal trading routine, I'm not really trading day before CPI, but this market I am, because just the ranges are so good. This is like, a day trader's paradise with these humongous ranges, right? So I've been even trading the afternoon sometimes. So same thing with ES. I think that, yeah, it would be nice if we take out that London high right here, 4 a.m., which we are coming back up into it. I don't think that these lows from Monday are safe. We never had a divergence at the low where ES took out a low and NQ didn't. I would think that, yesterday's high remains intact if we retrace somewhere within this range, I think. And then I would wait for a bearish shift on the 5 minute to be safe, I would say, but let me think here. The 3 minute would work too. I'm thinking about, okay, this is London session. Yeah, even the 1 minute would be okay, because it would just be taking out a session high, London high. Sometimes I think about time frames, and if, for example, we're taking out yesterday's daily high, I liked to wait for like a 5 minute confirmation just to make sure that that's the high of the day and that we're reversing. And yeah, that was pretty beautiful down there, up there, I mean. So yeah, I'm still bearish. I mean, did we put out a chat poll out there to see if everybody else, what's the poll out there? I wonder. I'm guessing everyone else is also
We had
majority bearish, because
we had it, and it was a third, is what I saw.
Interesting. Okay, then. Okay, that's fine. That's good. That's interesting. But yeah, to me that's pretty significant. Here where ES took out that high and Q did not, and that was pretty much, yeah, that was the start of the reversal. We had confirmation to the downside. We couldn't hold up that 4 hour as a sensitive area here, even down here for ES. ES actually, yeah, it looks weaker. Let me see here. Structurally, yeah, ES is down 0.5% this AM session, this pre-market, and NASDAQ is pretty much flat right now, actually. Yeah, so, and I can see that ES kind of came down lower here. So I wouldn't be surprised if maybe, NQ is the more erratic of the pair if NQ takes out a pre-market high and ES doesn't, or somewhere along the lines we have some sort of divergence there. And then I would look for shorts. It's a definitely short the pops type of market, and you got to be prepared for those large ranges at play. Let me think here.
I have a quick question for you about divergences on the low. You say that you want to see a divergence on the low. Why is that? For a good low to be made.
Low, I don't. Well, no, actually, that's why I don't trust this low, because there is no divergence. So Because if I were to be bullish, I would want to see, like, remember when I was there in person at a NinjaTrader studio, and I said, oh, I actually do like that. At some point on the daily, what was it? All the way back when I was in the studio. ES, yeah, we had that divergence. Oh, that was a while ago now. ES took out that low on the daily, and NQ didn't. And then I said, oh, okay, so that means that maybe we have a short-term low put in so we could retrace up. And that's essentially what ended up happening. But here, yeah, we don't have any sort of divergences there from Monday. And that's sort of always like the first inkling of a potential reversal for me. So you could see that yesterday we had one at the highs. And basically, well, when ES took out yesterday's high, I was kind of just waiting. It was a waiting game yesterday because NQ was failing over there like for probably like 20 minutes at the high of the day, near its high of the day, right? It was up here for around like 20 minutes. I was just waiting until it finally broke a little short-term low there so I could get in on the shorts. But yeah, you could see here that ES took this level out yesterday and NQ didn't, and that's always like a little bit of a tipping of the hand of maybe there's some rotation going on so that we could potentially have a reversal. So, and that's what ended up happening. And yeah, to me, I don't see that the bullish fair value gas bullish levels are really not holding strong. We're not sensitive in that area. Yesterday, I had this area as my final target for shorts. And, what I would have, if I were bullish, I would have liked this way that it just ticked into here. I would have wanted that to been like a strong reaction and then a reversal, but we didn't. And we just, dripped lower during Asia session. And then all in all, it's not a very large range. It's still like we talked about, this is like actually like a 700-point range, which is crazy during London session. Given New York session, where we had, oh my God, I have to take out the measurement tool at this point because it's so large. From here to here, we had a 1,400-point range yesterday in the NASDAQ. That's insane. So, you have to brace yourself and size accordingly. It's not unheard of now to have a 50-point stop loss on the NASDAQ. It's actually pretty normal because you're seeing these 1-minute bars. I think I even saw a 1-minute bar yesterday on NASDAQ around 2 p.m. It was like 150 points, which was insane, this little manipulation here. But most of these 1-minute bars are now like, let's see here. Most of them are like 50 points, 40 points each. So it's just bracing yourself for that. And everything is relative, So your strategies, well, my strategy or like most strategies are going to work the same. It's just a larger range. You just have to adjust. But it's like we've been talking about. Basically, we're having a whole month's range in one day, and that's amazing for like traders who we love volatility. But at the same time, don't go chasing don't go chasing price when it's already not your entry. You missed your entry. You just have to wait again. I think yesterday, I missed my first entry and then I just waited until the second retracement to get in. Otherwise, if you start chasing, then you get caught up in a manipulation that just like wipes you out and you missed your real entry. But yeah, we're having these insane 1-minute bars. Oh my gosh. Like even during London session, we had a drop there of 90 points in 1 minute. Wow. So yeah, it's all about keeping your size, like being aware how much you're risking, before you're entering the trade. So that if, let's say you take that loss, that it's not like a surprise to you. It should never be a surprise about how much your P&L is down after taking a loss, because that's how much you're willing to pay for the trade. But yeah, that's my bias today. I think we're going lower. I think I'd like to see us take out the London high on at least one of the indices, and then have a reversal back to the downside. And I do think Monday's low is very vulnerable today. Just because it's day before CPI doesn't mean that the range is going to be smaller. Because just this is the type of environment we're in. We're in a very large range environment. Even Monday and Tuesday, there was no news. It doesn't matter. Like, we had these humongous ranges.
Exactly.
So I think that
Yep.
we can hit Monday's low and continue lower, and CPI can continue us lower. Kind of like how NFP continued us lower. Yeah.
Yeah, no doubt. I mean, again, whatever people don't think can happen is happening in 5 minutes. So,
Right.
everybody pump the brakes, be patient, be small. The most important thing is exactly what Tanya said. It's okay to take a loss in this because there's going to be another opportunity. Could be minutes down the road. Sometimes they're seconds down the road. That's how much we're moving. Tanya, it's always great to see you here with us every Monday through Thursday from 9 to 9:15. And of course, Monday is your streaming day, which we always look forward to. Enjoy your stream today and have a great trading day, Tanya. Thank you so much.
Thank you. Have a great day.
Delhi,
All right. Next up, Kane. How are you?
I'm well.
I'm good. T-Trades is trying to squeeze a steak out of me, dude. Do you see this?
I can see that. Yeah, me and him were talking about this this trade. So I'm obviously, well, I've said in the chat, I'm obviously looking for those London highs. I'm actually looking for a bit higher than that. Actually, I'm looking for 17,700 on Nazi. Roughly, I would kind of look to get risk off around those London highs. But wow, what a market, eh? Like, just, I mean, we
agree.
spoke about it last week that the pivot seems in, and it's in. So.
Yeah. You said it's so bullish it hurts.
Yeah, I am. Like, look, I'm only bullish until that 17,700 level. Like, anywhere between 17,500, 17,700s, I can see us pulling back into those Monday lows. But until then, I'm long on this right now. I was stalking this trade all morning, and then kind of happened. Was talking it through with a bunch of people, and it was just like everything aligned. Just got to click, haven't you? So it is what it is.
So you are looking for higher this morning. What invalidates that? What makes you start to turn bearish?
This low. If we come back down into this low around this midnight level, around this sub 17K level, I'm out. I don't want to see us. I mean, look, I'm going to give up a lot of the trade. That's just the way I trade, and some people don't like that. But yeah, I want to see this level taken because ultimately, I'm an invalidation guy, right? What for me makes me bearish? This could do this, and nothing stops me wanting these highs, right? The only thing that stops me wanting these highs is if we trade below these lows. I'm not willing to take a loss after we expand so much, so fine. But this is the low for me. Because if we take these, we probably take this, and this is really what's giving me my bullish bias coming into New York. So yeah, and then like I said, we start to take those London highs, we start to take that 50% of the range that we're currently in, then I can obviously look to frame shorts from there. So at that point, I want to hold my trade for as long as possible. I tuned into the close show and was speaking about it with Leo. Sometimes I find myself getting stopped early on trades because I'm trying to take those small paper cuts as been discussed. And then when it runs without me, I get bearish quicker. Where actually, if I was in a long, I would have held it for longer. So I like to stay in those trades for as long as possible to keep me out of those bad trades. So yeah, that's kind of what invalidates it for me. That's my draw. And hopefully we get a nice push at the open. Hopefully the Orange Man makes a deal. Everything that you guys have all discussed, so a deal with a country of a country that is probably more likely to bend the knee than not China. But look, this is the China announcement, right? Literally dead on 7. They announced those additional tariffs. We retraced the move. I think the market is generally bored of this tariff war now. Obviously, it's sensitive to it, but it's kind of like if the tariffs become 500% aside, does it change anything? Not really. They're still at a war. I think the only thing it's going to be reactive to now is if it's something positive. So I want to be siding on the better side of that. And I'm just expecting this is the piece of the pie that I want to grab, and I want to hold on to it for as long as possible, especially when we get these big violent moves, right? So yeah.
Yeah. And so this is yesterday, we had Jason Shapiro on the show from Crowded Market Report. He'll be following up on some shows on NinjaTrader Live, which is really cool. And he trades a contrarian mindset. And one of the things that he talks about a lot is when bad news starts turning into the opposite reactions on the tape. So let's talk about everything that we've been seeing so far in tariff news has been bearish, right? And we saw more bearish news again this morning, but we didn't make a lower low. That to him is a contrarian setup to where all of a sudden new lows were not made on bearish news, and now we're starting to firm up. Pharm and I talked about this morning, where it was like the tape had really looked like it was getting ready to just fall apart, and it has held. There's just some underlying bids down here, and so I can't disagree with what you're looking at this morning in terms of price action. I think that the tape is telling us that it's kind of tired of going down. And who knows? I mean, you could even see bad news hit the tape again, Kane, and ultimately not make a new low and even cause a bigger rally just because shorts get trapped again.
Literally exactly what I'm not expecting some random news, obviously, because I don't have the ear of the person that is going to announce this stuff. So I just have to be risk off, right? Like yesterday, I did not expect us to drop as much as we did. Yeah, I would have loved to stay in my trade, but it's like I could have just got easily whipped out of my trade yesterday because someone says that tariffs or some random country makes a deal with Trump about something. And I'm just aware of that. So I'm just trying to be risk off and trying to cut my trades where to the point where I'm like, okay, we're trading in a good area. Done. See ya. Move on with my life. So that's where we're at. I'm actually more interested about the CPI print tomorrow. I just want to know if they're really going to put power into a corner, and because ultimately, if that comes in like hot, he has no choice but to do nothing, and that's just going to absolutely ruin everyone's plan. If it comes in soft, then who knows? They may have an emergency rate cut. I don't know, but I also agree with forgive me, the gentleman's name that was on this morning. If they just suddenly announce an emergency rate cut, I can just see this market just free falling. They would just instill fear into the market. We've seen it a few times. These random rate cuts or random, like they're pricing in 25. If we announce 50, boom, the market they rally, and then the market hates it, and we retrace the entire move. So I think it's all about how we deliver out of this now. Trump's put everyone in a corner, and we just got to play the hand we're given. I don't like it. The volatility's here. We need to enjoy it as much as we possibly can. But we just need to make sure that we're not getting greedy with these moves. I understand that this move is really probably greedy in the grand scheme of things, but I'm trying to stay in this move for as long as possible because I don't want to flip bearish before we take those highs. And if I suddenly close my trade here to realize my profit, I'm going to flip bearish naturally because I'm a human being and that's just how we work. So yeah,
I think that's a great mindset coming into today. Yeah, I think that that's the way you have to trade this right now. I really do think, because over trading is too difficult in this. The afternoon guys, they've done an amazing job of like getting in and getting out. I've noticed that because they're trading, really short-term scalps. I don't personally trade that way. If you guys haven't caught the afternoon stuff, Kane and I are there every day watching it. They've done an amazing job. I think not everyone can be as active and as efficient as what I've seen out of Order Flow Labs. Merritt's actually done a fantastic job at that as well, doing that. But some people, if you're not doing a great job of executing and it's just you're getting whipped around, at this approach that Kane's showing right now, I think is a much better path. But so I'm gonna head out for the day. I will be watching you guys. I'm gonna see if I have to buy T-Trade's a steak or not. And he's saying, what does he wants, like a wood fired? I mean, he's getting, he's gonna be trolling.
He's getting a bit demanding, isn't he?
Okay.
That's it. We bring him to the office.
I mean, what's he gonna want?
He suddenly thinks he owns the place.
Does this include size? Does this include cocktails? I mean, like, what am I getting into here? I mean,
I know.
you know,
I just saw he
is it just
wanted
he
a
and I?
steak.
Is he bringing
Yeah.
friends? I mean,
Yeah.
he shows up with 4 or 5 people. He's got his whole entourage with him. I don't know.
No.
Anyway, I had a blast with you guys. This is your day, Kane. I will leave you now. All the best, my brother. I will watch you in chat, and I'll talk to you soon.
Appreciate you, Daddy. Have a good day. Chat, how we doing? Obviously, I know this is I'm already in this, but we'll go through exactly why I got into this. Ultimately, I don't really like the fact we took this daily low with Asia. I'm not fully against it, but we trade back below it into London around that 6-7 o'clock. And then what I was just framing is I wanted to see this 4-hour low set at 2, traded into. We got it. And then I just want to see a 15-minute swing inside of that forms, and then we rally out a little bit, and then we form another, and they just self-stopped into this. What I don't want to see now is I don't want to see this. I've marked this in pink, this hourly swing. I don't want to see this hold. I want to see us probably push through this at 9:30. If we start to retrace down to here, I've already cut this on the basis that we are going to go lower. And if we don't and we start to hold, then I'll just get back into the move. So yeah, it's a bit of an awkward one to take just before the stream. We got a really nice push out of it. And yeah, I just don't want to see this now start to trade lower. My invalidation is if we were to trade here just violently, I would want to get out of it. I don't want to get slipped. I don't want to take a loss here. I don't want to, but yeah, ultimately, like I said, I know this is a lot of money. I know it's a big move. But I do genuinely want this high. My limit's all the way up here because I just don't want to. I don't want to see a big move randomly for whatever reason on an announcement. I want to see us trade into here, and then I can trail stops and get stopped out of it that way. And yeah, if we get a big announcement and we just absolutely rally 1,000 points for whatever knows reason, I want to capture that. I don't want to be greedy, but I also don't want to leave money on the table for the sake of it. So I have my stop in. This is kind of my actual TP area around here. And if we push up, then I would just simply just trail some stops to stay in the move as long as possible. I don't really agree with partials, Clue. I understand some people do. I could have partialed here, and held one, but that just isn't really it just isn't really how I work. And I've done the reps, not partialing, so changing it now would just be silly. On bigger moves, I can make an argument for it, to be honest. Like huge ranges and violent moves, not giving up too much of the pie. But like, how many do I partial here? Do I take off half? Well, I can't take off 1.5 minis. So do I take off 1? So then I get into that realm. So I actually I buy stopped into this. So after we took out this low, I just buy stop, and obviously factoring in some slippage, like around 4 points, I just buy stopped about 4 points below my entry, knowing that I'm going to get slipped in around there. And this just happened to work out that I got slipped half a tick. Not half a tick. That'd be insane. Half a tick, a quarter of a point above. So yeah, that's kind of what I'm looking at. My standard deviation choice. Yeah, I always favor the 15-minute one over everything. And this one made the most sense. A lot of people would have used this, but I just didn't really like it. I like this violent wick and then push lower. If this would have taken this high, then obviously I would have used it. But this made the low, then made the high, then made the low. There was no subsequent low, then subsequent low. So can I make my chart fonts a bit bigger? I could, however, it would get very messy, and it just probably messes with me a bit more. I can talk you through. If you have a question about what it is or levels or price levels, let me know. I obviously tune into the PM sessions with the guys, and I tuned into Merit Stream yesterday, and I can understand that some of this can be harder to see. So I can zoom in as much as you want. I just don't like having the fonts a bit bigger. This is a previous 4-hour low that I've got marked. This is a 15-minute low. This is a 15-minute low. I'm trying to stay on the 15-minute chart to really not get caught in a lot of the noise and the pullbacks. Why buy stop? Because the market volatility just allows me to do that. It's all right. We're coming into the open now. I just want to see this push. I really just want to see this push. I don't, maybe like a little pullback and then a push, fake some shorts in, potentially open range breakout shorts, and then just push. And if we look to come lower, then I wouldn't fade this being this buying volume just getting faded and selling. I'm not a volume trader, so when I say volume, I'm just measuring candles. Obviously, some of you guys do trade volume, do trade delta, do trade all those things. I don't, so apologies. But yeah, when I speak about volume, I'm not actually reading the tape or looking at orders in the market or anything like that. So, yeah. Just want to see this push. This is a nice characteristic that the NQ made this low. ES is showing some strength. So we just want to see ES really push out of this area, like I said. Appreciate you, Merit. I'm on the side of order flow. That's what I like to hear for someone that doesn't look at it. My favorite entry time frame is roughly the M5, M15. They're the most favorite, but obviously sometimes I do go granular and get down to the 3-minute. I try and avoid the 1 minute, especially in markets like this, because yeah, I just don't want to. I don't want to get caught up. And to be honest, I've really find that I can get caught up sometimes. Okay, so broke out the opening range that 30-second opening range. So this orange box, it just marks a 30-second opening range. Yeah, I mean, there's probably there's a ton of stops here. So really what I'm personally expecting is either we get a run and then potentially we push a lot higher and we can get out up here, or we start to see some sideways action. I can just cut this trade and move on with my day. I'm not really looking for shorts today. I kind of said that I was bullish. It hurt. And it does hurt, especially when it's a market that is so downtrending, right? I am not a trend trader. I'm actually the opposite. I like to catch the extremes of the ranges, which is quite literally the definition of a reversal trader. So I like to grab these lows because they can size, and then if we get some nice movement, and then the trade is obviously a lot bigger, right? So that's typically my model and how I like to trade. So yeah, let's hope that Delhi has to buy T a stake. We just need to keep pressuring T to reveal his face. You know, for someone that looks like James Franco, and he mentions a lot that it's a bit of a crime that he doesn't. You know. Yeah, I don't really like. To me, this is not really a lot, right? Because you have to understand something is all of this was drawn over here. This is just like old things. I just wanted to see us, after we get this impulse higher, I want to see us trade into 50% of this, create some sort of higher time frame swing, and then create lower time frame swings in and around that, showing this rounding out. I wanted to take this here, but I really got put off when we came into 8 o'clock. At 8 o'clock, when we pushed higher, I was actually expecting us to then come lower, take this low, and then push higher. But around that 8:30 mark, 8:30 stalled. We took at 8:35 this 15-minute low, and then we had and I basically just said, if we trade through this area, I want to be in this trade. And yeah, I self-stopped, like I said, factored in some slippage because of the spread. It's insane right now. Got the entry that I kind of wanted, and I just want to see us accelerate into these highs. And I've got my sell limit all the way up here in case we get something pretty violent. And yeah, now I just want to see us continue. I would say if we start to trade into these lows, I'll look to just scrap it, because buyers here are probably at this point getting ran out, and then they're probably looking to buy lower. And then I would simply just want to respect discount of this move, right? I would not want to see us do this. At that point, I would, my stop at this point is just pulling it up here. I would let the trade breathe. At some point, I'm going to be able to, if we get there, I'm going to be able to slam my stop in at that area that I wanted to take full profits, and then all of this money is free in my head. And if I don't get to, if I don't get it, I don't get it. I get the area that I already wanted originally. Yeah. How often do I go live inside the lab? I go live inside the lab every Tuesday and Thursday. If I can't do a Tuesday or Thursday, I typically do it Monday or Friday, either side. I don't like to trade Mondays and Fridays too much. I plan lots of my admin life stuff on Mondays and Fridays. Not to say I don't trade them. I just don't want to be committed to just being in my house all day, every day. So yeah, so it is what it is. What are my standard deviation settings? They are this. This is what it looks like. Do I continue to hold trades around news? It really depends on the news. CPI, FOMC, NFP, no. Some random yellow folder that I'm not really that bothered about. Yeah, I would. Yeah. You can see the levels probably a bit clearer now. No worries, guys. This is not the acceleration that I wanted, I will add. I think the market is just really looking for something positive here, isn't it? How important do I think it is to stick to a model that fits my personality? Fits your personality. I think it's very important. If you're an impatient trader and you're trading a swing model, it's probably not going to suit you, right? If you're a patient trader and you're scalping, you probably are going to get caught up a bit. I just realized we are trading at 5K on ES. It's probably quite a pivotal area, isn't it? I wouldn't want to see ES trade below the opening range out of 5K. That would suggest that for something that is so number sensitive, yeah, thanks to whoever in chat said who's going to claim 5K ES, because I was like, wow, we're back at 5K. Why is the platform Trading View and not NinjaTrader 8? I just don't have parallels on my computer. I like to trade on Trading View. I like to have everything centralized. I have a bunch of indicators that kind of help me automate my trading style, and getting them onto NinjaTrader and me proficient in NinjaTrader and the time frame. It was a bit tiresome. So we just opted to use this for now. In the future, I will trade on NinjaTrader. We're in that 4-hour imbalance. I'm going to be honest, I don't really care about this. For the simple fact that we took out this 4-hour low. This is rounding out quite nicely. And then this was like the area. And I said this inside of the lab earlier, when we literally took this low. I said, if we take this high, what will be the chances that we then kick ourselves for not looking for longs here? If we take longs and then we deviate lower, will we kick ourselves that this was a bad setup? What does your model say? And that was kind of it. My model is trading these extremes, and if I'm wrong, I'm wrong. And then, yeah, like I said, we're really approaching this area now. I want to see big volume through here. Volume, again, just being a nice big, thick candle. You know, let's see what happens. It's getting close, T. It's getting close. Yeah, so now for me, like I'm just going to trail to the opening range. I don't want to see this deviate. And if, like I said, if we push back up, if we push a bit harder, then I would just trail my stop loss to this high. And like I said, I don't want to see us deviate too much lower. Because if we do, I would just accept that this is probably the terminus for my trade and cut this, right? I'm just using this tool to measure out 1.5k ticks. 355.25. Yeah, good call from you, Merit. Some nice stops resting. Buy them. Yeah. This 5k area now turning to support. So I'll give this a 5-minute. T's got this candle closure in the next 4 minutes to get up here. If we get up here, then I will celebrate the stakes on Delhi by putting my stop loss at that high. And if we trade into it, we trade into it. Like I said, this is the area that I wanted to see traded into. So at that point, I don't want to get greedy. Stakes are on Delhi officially. That's crazy. There we go. So yeah, just sticking to the plan, letting the trade breathe. Yeah. Stakes are on Delhi. So everyone's gonna meet up in Naples, and the stake bill is on Delhi. Everyone's invited, right? NinjaTrader responded with W, so that means yes. Nice call, T. So yeah, so now my actual draw here has been hit, and now this is like I said. Now factor in some 3 points of slippage. So let's just change this to 7. Now I'm getting slipped at the area that I wanted to get stopped out at, or you know, or limited out at. And now if we push up here and we get this for me is now all free money, right? It's 1,000 ticks. It's probably a bit greedy of me, but ultimately we've tagged discount. If we now look to push lower, then that's it. The draw was that London high for me. Yeah, that's it really. That was my draw. And that, like I said, if we push through, I want to give it room to just accelerate through this area. And if not, and we start to deviate back below, I want to get stopped out and take my profit off of the table. Like I said, I could have just limited out here. This is a completely free trade for me now. And this is the area I would have limited. And now the only thing that can ruin this is if we get a bad candle that just absolutely gaps me lower. And that's just a risk that I'm probably willing to take. Well, I definitely am. So yeah, my draw. That's where I'm anticipating price to trade into. So yeah, that stakes on Delhi area is acting as a bit of resistance. See you later, T. Enjoy. Can I show my trading view indicator? It's an SMT indicator, so you would have seen it earlier here. It prints automatically. So you see this red line here? It's not actually a line. It's just an SMT indicator that helps me print SMT or divergence. Okay, so we got trailed out of that. Pretty nice trade overall. And yeah, ultimately this is the area that I now just sit on my hands. I don't really want to give too much back to the market. It's a good day. And yeah, we gave the trade the opportunity to run up into here. I don't want to see us diverge back below this range, because now this is just for me, I look at this as potentially trapped longs. Trump just posted on Truth Social that it's a great time to buy. Is that the top? I might have just marked the top. Well, we stuck to the plan. If it was a great time to buy, it probably would have pushed. But I don't know. We'll see. We'll see. Overall, nice 5.5 hour trade. And yeah. Ultimately, I just want to see this breathe. I'll wait till 10 now, no matter what. And we'll go from there. If anyone has any questions, let us know. Azad, you're much more mechanical. I will openly admit, I think that my intuition in trading is my edge, right? Is my model mechanical to a degree, but it's a pattern of candles, right? I'm not using intuition like the volume, like the order flow traders, right? They'll see things, they'll digest that information and look to then get on side with it. I think that's more difficult than seeing a 15-minute low taken an inversion inside of a 4-hour low. You know what I mean? Like I'm just simply I'm checking off a bunch of things and clicking the button and then allowing my intuition is how long I hold these trades and where that draw is and how I react to the market. That for me is the important bit. I would say that it again just probably depends on your personality. Either you're impatient and you want to just let the mechanical edge take over, get that, or you accept your intuition because you've read candles for so long, does play a part. I actually don't disagree with either. However you find confluence in the market is the important thing. Guys, my SMT indicator is private. You won't be able to find it. Yes, coming back down to that, rejected that. It rejected that like 5,050 level. I mean, we wicked above it into the 70s, but now trading back towards 5,000. I heard that Crudele might be buying stakes for the boys. However, I think he would probably be upset to think that there's probably 1,000 people in here and only 282 people like to stream. So in his absence, you should probably like to stream so that he may or may not buy everyone's stakes. Right now, I think the only person entitled to them is T. They made a bet. So yes, let's just go over the let's go over the trade, right? So for me, I'm just going to turn my drawings off and I'm going to zoom in so everybody can see it, right? What I want to see is I always really want to I want to see this low taken. If this is a tradable low that everyone keeps talking about, then this candle that failed to take previous day high, ES took it, then this candle will set the tone. Either we accelerate through or there you go. He said 1,000 likes and he would do a sick swag giveaway next week. We've got to get 700 likes. So that means about a quarter of you have liked the stream. We can do it. So anyway, I want to engage at the extremes, right? So where are the extremes? Previous day low, previous day high. If we engaged around this previous day high level yesterday and held to the close, we would have caught 1,000 points. Okay. If I engage at previous day low today, where's my draw? Well, let's go lower, right? So 4 hour. If we're going to engage at that low, which at this point is right here, this level. Yeah. when can I do it? Well, I don't know about you guys, but I'm asleep during these hours, right? That's the reality. I'm asleep. I'm waking up an hour into this candle, right? So I'm waking up here. And the reality is I'm waking up probably more like when this candle's here. So this has moved without me. So I can already see that we've taken previous day low with this level, right? So we swept. Asia kind of consolidated, swept, right? So we're already higher. Then we have that 2 a.m. candle that we looked at, which is that 4-hour low, right? So if I want to engage at the extremes, I want to be engaging as close to this low as possible, right? Now, can I just trade this 4-hour low and put my stop below here? Well, of course I could, but that's an absolutely monstrous stop loss, right? How far is that? Oh, it's 153 points, 154 points. This is a bit too big for me, right? So what do I look for? I wait for this 4-hour candle to confirm that there are buyers present here and that we are not looking to trade lower. So what would that be? Just a wick below this area and a close back inside of the range being this premium discount right here. And then I like to look on the hourly. Are we going to hourly like sweep into this hour? By the looks of it, not, right? So this 4-hour candle, I'm looking to close back inside of here. If I can engage here inside of that hourly candle, 8 a.m. sweep, 7 a.m. low, trade higher. Okay, so what happens? We go to the 15-minute. We get a 15-minute swing inside of that low. Yeah. We push up. We fail. We push quite a lot higher, actually, by the looks of it. Or maybe that was we pushed higher and then lower. Yeah, we pushed higher and then we fail, right? But from 7:45 till 8 here, there's a 15-minute low. So this is the 15-minute low. God, I really need to change this color of the pink. This is the 15-minute low. And then at 8:30, we print another 15-minute candle, which takes the low. At this point, if we close back or we start to trade back up in here, I want to be in this trade. So I just buy stop on this inversion that kind of set the move down. All right. That kind of solidifies this low with this candle. I didn't trust it an awful bunch because, again, 8 o'clock prints and I want to see this low swept. And then once we get this 15-minute closure, I immediately just buy stop with this, right? So my trade then becomes this. We factor in, we look up here and it says 2 points. It wasn't 2 points earlier. And then what I do is I just move my trade 2 points lower because it's stop order. I'm going to get slipped into it because I'm selling and I'm going to sell into the, or buy into the book or into the ask. And then, yeah, at that point, I want to be slipped into the trade around that 980 level. Boom. I get slipped in. I can adjust my stop loss to this low. And now if we are to go higher, this low will be the low for me. Right? Because this 8:30 candle, 8:30 to 8:45, this 15-minute candle. So if we go on the 15-minute, this should be the low. And if not, we go here. So for me, I'm able to sell stop into this because if we trade there, then this solidifies the low for me. And at that point, we're able to trade into here and we give it room on this, not at this 9:30, 9:45 mark inside this 15-minute candle. We don't want to see a 15-minute swing form here because at that point, obviously the candle's now pushing, but at that point, that hourly is looking like an hourly swing. And that's when I want to get out. Yeah. So I give it room. I slam my stop loss to where I would have wanted to get out of the trade and I let it do its thing. No, I don't only trade with limits. I limit in a lot, but I actually think getting stopped into your trade is one of the best ways to get into it. Why didn't I wait for the retest? Because we'd already traded through it quite a lot. If we trade here and then I limit and then we trade higher, the likelihood is that we just do this. I want to see it with volume and then I can really just manage that trade. Guys, I'd already closed above the inversion a bunch. Yeah, a bunch of times. I don't know. We'll take read a bit, but I'm not looking to eagerly short this. ES is holding that 5,000s level. I just stream on NinjaTrader on Wednesdays. Wednesdays 9:15 to 11 every Wednesday. Unless I'm sick, incapacitated, whatever, you know, I'm here. What's the best way to hold on to your winning trades? Don't close them. Obviously that's satire, but you want to understand where price is drawing to, right? Price is drawing to somewhere. It's normally drawing to liquidity. It's normally trying to run stops. Like Merritt pointed out, the stop's just resting above here. It's drawing to them. It wants to take those out. Why? It causes pain. The market likes pain. If everyone could win all of the time, there would be no pain in the market. The market is drawn to pain. Good morning. The best streamer ever just joined the chat. It's not T-Trader, it's not me. Where do I measure the ranges? I did a video about this on Twitter. Soft plug, but you can just watch it because it will explain it better, right? I measure the ranges from here. We had an impulse higher. I want to see 50% of this area roughly. It rests around this 4-hour low, you know? It's Leo the Tiger. Leo. Merritt ridiculed me for pronouncing it wrong for so long. It's okay. I accept it. Morning, you know. I'm on YouTube. Oh, I don't upload on YouTube. I'm on YouTube. Do I upload on YouTube? No. We probably need to change that. In all honesty, we probably need to change that in some capacity. He's an ES trader. Yeah, the ES trader that only trades NQ. No, honestly, guys, if you haven't already, look, I'm a very stubborn person when it comes to my trading. And from tuning into Merit streams, Leo streams, you know, the Order Flow Labs guys, I've learned quite a bit about order flow just from these streams. And obviously I don't profess or claim to know anything significant, but it's definitely helped. So if you haven't already, make sure you tune into their streams at the close and Merits on a Tuesday. I'm there. So every week. So yeah. You loved that one YouTube live. Yeah, it was very impulse YouTube live. And some guy bet me $100 that I was wrong. And it turned out I was right. And to be fair to him, he offered to pay me, but I didn't accept it. So yeah. On the 4-minute inverse, I think you might be forcing that one, buddy. I don't think any time frame ever. Yeah, I'd never used the 4-minute. I think that might be forcing it. Ultimately, like I've always said, right, is I like to see impulses higher, trap traders, and then impulse lower, and I measure that impulse via the inversion, that gap. And once those traders are trapped, I don't want to see us trade back up there, and I want to trade away from them. That's kind of how I do it. SMT is just ICT's term for a divergence between two assets. And it just, you know what, after I used it for so long, explaining to people that divergence is SMT, I just consistently refer back to it as SMT. So a lot of people get it. It's just divergence like that. Where is it? I mean, there's none here because it's actually quite an efficiently delivered market. But it's just when, you know, one asset takes the high. I mean, you know that though. What did I just do? I did something because something's off. What did I do? This low is not anchored correctly, which I think I did something. I don't know. So when did I break even? I was break even after we impulsed above this high. So at this candle, I don't want to see us trade lower. We trade lower, retrace 600 ticks. I'm out. You know, why not just call it divergence? I don't know, Delhi. I mean, I try to as much as I can. I just, like I said, I consistently fall back into it. It's just divergence. It's that cracking correlation between the two assets. You can see it here, right? Actually, the indicator's printing it right now. So you see this high over here is all the way up here on ES. Well, you probably won't be able to see it. This dotted line symbolizes that ES is traded above this high or hasn't, and NQ has. So, yeah. Okay, this is 10. This is 10. Okay, so for me now, all I want to see is us trade into this area at 10, impulse higher. The further we go, the better. And then I'm looking for that inversion in a leg as close to the high as possible. And I can risk and trade back into discount. And the discount will look like this, right? So we can go over how I draw them. I drew this one to here. Did we officially come back into 50%? No. Did we officially come back into 50% after this? No. So now this just keeps going until 50% is delivered. Was 730 manipulation for me? 730 manipulation? No, I would say that it was that trade into that low. I'm not measuring this. I'm measuring this move, right? And I'm also measuring a larger move. I don't really like the term manipulation. I use it in the context of running stops, and a lot of people know that. So when I know people know that, I refer to it as manipulation. But I'm just simply waiting for those stops to build up, get ran, and then impulse away. London has clear SMT. Yeah. They indicate won't draw it because it's already up above it. You know. Look, the way I ended this trade is risky, right? But it's yeah. You coded an opening range auto script in NinjaScript earlier. Like you should put it in the ecosystem. $500 per download. I think you'll get about one download, including your solo. $500 for a singular indicator would be extortionate. A suite of tools or something that does anything other than prints a 30-second candle or a 5-minute candle would probably make a bit more sense. But anyway. Anyone have a decoder? Oh my God. So yeah, so we're kind of still trading above this high. I'm some of you might now ask me, are you upset about it? No, I'm not. Because if we hit this draw now, then I can officially turn bearish or start to look for shorts. Well, some people might say it's risky because I got stopped into the trade, Chris. Whereas a lot of people like to limit. I got stopped into it, which is why people would say it's risky. Personally, it's everything I wanted to see. Logical liquidity target is the high in the discount, high in that 50% that I want to see traded into before flipping bearish. I'm not necessarily going to get bearish there. What is that level you draw? There's a lot of levels drawn on my chart, mate. So you might have to help me out there. You may have to help me out with that one. Yeah, it's pitch perfect for me as well, Chris. Midnight, 4 hour below, swing, 4 hour swing point, 2 15-minute swing points. It would be great. The only thing that would have been nicer is if ES took one of these, I could have really got into this. What's my win rate? 100%, obviously. I never lose. That's insane. I'm insulted you asked. Obviously, that's a joke. It depends on a given day. Some days I take a lot of paper cuts, and then and then my win rate for that day is low, right? Some days I grab one win and leave. So if you average that out over a month, my win rate is probably lower because sometimes I do take a couple of losses before grabbing that winner. I asked, why is that the level you draw? Yeah, but mate, you're asking me to explain my whole chart that I don't really understand the question then. Do you know what I mean? You're asking me to, you understand what you're talking about. I don't, probably the way to answer that question. If you tell me what level via some prices, I can probably figure it out. Leo, 60% of the time I lose all my money, and 40% of the time I'm a trillionaire. So you do the maths. NinjaTrader giving out free t-shirts. This is not a NinjaTrader shirt. This is the lab shirt. Where are they giving out free shirts? I want a free shirt. I should have also, Savannah, if you're listening, I was offered merchandise when I came to the studio and I forgot to collect it. Sad. Sad, sad, sad. Yeah, I don't know why I'm on the 4-minute chart. Someone pointed out the 4-minute inversion and we went to it and I never come off of it. Sorry. That is silly. Yeah, don't trade the 4-minute. Don't trade like the 7-minute or the 4-minute or the 2-minute. I personally like the 3-minute, the 5, the 15, the hour, the 4, the daily, the weekly. I actually want to delete this 4-minute off my chart. How do I measure my standard deviations? Well, this standard deviation is measuring this low to this high, and then we take this low again. And then we impulse through it. This is the move that I want to measure. And then I measure this move. Again, I don't necessarily measure this move because it didn't really create new structure here. This is just one downtrend. This is a low that broke. This is the high that set this low that took. So it's kind of like that. -2, -2.5. I want to see a retrace into this area. And then I do want to see us expand. However, this area is going to offer a lot of resistance in some way. And I want it to be risk off there. And also it was just a really large trade. I do use midnight price. And I like it when we deviate below, push higher, come back to it. This area should always act as support. So there's a lot of confluences for getting into this trade, right? Yeah. You are #1 swag friend. We would never betray you like that. Nah, they do. They will betray you. If you go into the office, you'll be offered all of the merchandise. Just telling the truth. Don't like to lie. You know. How do we frame shorts from here? I think I need to see ES below 5K before we probably could frame some shorts. I don't really like the fact that 10 a.m. took 9 a.m. high. So if we look at that 4-hour candle, just like we looked at below here, we're framing this. Is there something that we can get involved with up here? No, there's no impulse higher. I wouldn't say that necessarily anyone was looking for shorts here. So what I'd be looking for is I'd looking for some sideways action, run in some shorts, and then stop them out, impulse, and then trade back through. Yeah. I think a lot of people always fall victim to being ran in that stop hunt. Wait for something that, frame a trade, wait for that trade to potentially get stopped, and then you're most likely going to grab one. That old saying of put your entries where your stops are and you'll have a better win rate. Thank you, Savannah. What screen do I use? Oh God, you're getting very technical on me, guys. I just use this LG Ultra Gear monitor. I actually don't know what it is or what it does. It's very thin, like frameless, and yeah. You're selling this? Okay, fair enough. Stick to what you know best. I would always just encourage everyone to do what they They always do. I do like the hour sweep. I just don't like the fact that we didn't impulse higher. There's no impulse here for me. And even if we go to the 1 minute, this is the impulse at 10. I've had no chance to get back into that trade. I would never sell stop this because there's nothing. So this would be let's just for argument's sake, say this is the trade. And let's just see how well it plays up. I personally don't like it. I would personally wait for some sort of volume. Volume being that impulse. And then trade lower. And if we get divergence, even better. If not, I'll wait. Ultimately, guys, I am probably the number one person at getting a winner in the day. And I spoke about this. This is my model draw. -2, discount, trade to -4. If I then just click this because we got a winner and I have the money on the day, I give it back, and I don't like to do that. What type of batteries do I use in my mouse? I don't know. I bought them from Orderflow Labs. Those guys are the best. Logical liquidity target is just that resting low or high in around that 50% of the range. What the hell? It's called Duracell. Would you wait for the -2 standard deviation before going short after 10 a.m.? We already hit -2 here. So for me, this is quite bullish, guys. And like I said, I came into the market today being quite bullish. I don't really want to fade that right now. Do I ever add to my winning trades? Yes, when the range is less than 700 points. Adding here gives me a worse entry, which means I would have to give back more of my trade. I'm just sized at the lows where I can be. I'm going to be honest, adding to your winners is hard. It's one of the hardest things you'll probably ever do. But once you can get that right in the right market conditions, it's such a big change. Take it slow, mate. The market conditions are really horrible right now. I know plenty of really good traders getting caught up in these moves up and moves down. It's obvious we're quite bearish overall. But you can get caught in these 700-point rallies and get decimated if you don't have a stop in, right? You go to the toilet quickly before you get into trade. Oh, I'm busting for a toilet. You go to the toilet, come back, you're down 400 points because someone tweeted something. Silly, right? And yeah, it's like, oh, you should just make sure you place your stop loss. Well, duh. But like, yeah, I don't subscribe to 50% of the range. I subscribe to liquidity, and this is 50%. This high is the 50% of the range from a liquidity standpoint, right? This is the first hourly high in that area. If we reverse from here, I'll look to just capitalize on this on the way down. I like trading the risky entry at the top of the range. I do. I really like it. I live for it, in fact. However, I'm fully aware that this was my draw for the day. And that is the area that I would personally want to get most short in. We traded a lot up here yesterday. We came through this area quite hard and quite fast. We trade back up into here, take out this. It ticks all of my boxes. At that point, I can't not trade it. As soon as the model appears, I click the button. Right now, the model's appearing. It's just not in the area that I want. And it's also on a time frame of this. And also, I just wouldn't have been in it. That's the reality of it. Yeah. We can delete the stakes level. And we can go from there. You know? Right now, the long is looking like we closed at a really good area. We're still above the opening range. We're positive on the day. I don't know. See that S&T is now printed. It's not on here, I don't think. Oh, it is. I just need to delete it and then re-add it. Like I said, until ES really trades below 5K, it's above 5K. And then whilst it's above 5K, I deem it quite good. We've gone from 16 to 17, or 17.5, 17.6. So this looks very roundy outy, right? If that is a word or a sentence I ever thought I'd say. And if we really mark out the highs and lows of this was the before the Trump rally, yeah, and the tariff pause rally. This is the high of it. If we measure the midpoint of those two areas, it's right here. Where are we right now? Range trading 101. Don't engage at the midpoint of a range. It would be silly of me to argue that this is not a range. We didn't take the high and we didn't take the low. Yeah. What's delta? Is delta positive or negative? Tell me that, and then we can just trade that all day. As soon as it flips, we can just trade that. Roundy outy sounds very made up. No, I'm not like hard shitting the lab, but obviously that's where I live and all this stuff is explained very in detail. But my deviation model, it's not my model. So no, I can't explain that. If you're asking me why I trade deviations this way, it's because I've done the work. But yeah, there's a lot of information about deviations. If you measured this move and it took this much effort to get here, it should expand to 2 to 5 times the amount. You know, if we retrace 50% of the current range, well, for me, as I said, from a liquidity standpoint, right now the low inside of that range is 930. And if we trade there, will I want to see that? Well, that is like an opening range. That's the opening range getting broken. And I've longed the opening range lows a few times and got burnt. How much return does my model make in a month? So I'm really fighting the urge to answer this the way I want to answer it. But the truth is, it really depends on market conditions. Jordan, I'll give you my national insurance number if you want to pay my tax bill. If not, then yeah, what would you need it for, mate? Anyway, this might shift from here. It might, and it might go up. No, my model does not present every session. In fact, my model hasn't presented this New York session yet, other than this minute, and I would never take it. So Trump says buy stocks. Kane is bullish. Coincidence? I think not. I am Trump. That's basically what Leo is inferring. I'm just gonna tweet something. Will the lab capital be a prop firm? I have no idea what the lab capital will be right now. Well, I do, but I don't want to share it with you. Would I say my model is a grower or a shower? I would say we're not talking about my model. And my model is a repeatable way of me getting in and out of the market. That's all it is. Oh wow, I'm getting roasted. This is how it feels. Welcome to the roast of Trader Kane. Don't you usually look for reversals? Yeah, I've said that though. We're very much in that area where I want to see this impulse higher before looking to go lower. And that's my intuition. Could be wrong and we could die off, but it would just go without me. Any more book recommendations? What book did I recommend last week? The Mountain one? You read that entire book in a week. Crazy. What other book? Mo Gaudat does a really good book. Soul for Happy by Mo Gaudat. Should start getting royalties on this, shouldn't I? I'm going to be honest though, it's not a trading book. It's again, it's a life book. I personally really like the book. And I would definitely recommend it to anybody. He also has a book on AI that's also really good. Basically, I will give you the very short version of what the book is about. I won't spoil anything, but the book is about someone that went through a very hard period of that time of their life when everybody could probably argue that they were supposed to be happy. They obviously lost someone very close to them, and they chose to look on the bright side of life and create I guess, a formula for happiness. Depends on how you look at it. Some people have watched it and gone, yeah, it's utter crap. But I think you just have to look on the positive side. This person is obviously very, very smart. They worked for Google. They did a lot. So I really enjoyed the book. I listen to the audiobook sometimes when I'm driving, just to remind myself of the steps of it. But I think it's really good. It's a way that you can always look on the positive side of things. The Secret. I am big, 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 big fan of Law of Attraction. So I do really think The Secret is if I had to recommend one book to anybody, it would be The Secret. It's if you can see it, you can think about it, you can make it happen. And I truly believe that. That's not just some fallacy that, you know. If you don't vote for Stake, then I may have to end the stream early. If Stake doesn't win, I'm going to be very upset. Also, we're at 501 likes. We're just over 1,000 viewers. Let's get it up to 750 likes. Come on, let's do it. Let's just get it done. Don't even think about it. It's just everyone like the stream if you haven't. Subscribe to NinjaTrader. Then let's just do it. Yeah. I am the retired cowboy. Conor McGregor said that in a press conference. He said it because it's in the book, and he validates the book. The book is on Law of Attraction, right? His exact terminology is, if you can see it, you can feel it, you can make it happen. It's the book. If you think about something, you know. Kane is not singing Chasing Waterfalls at 750 likes. Kane will do a giveaway for something at 750 likes, but he will not sing. You would have to smash 5,000 viewers and 10,000 likes. Yeah, exactly. No. Not happening. Sorry. Absolutely no way. Yeah, the NinjaTrader girls also said he looked like James Franco. I think. Anyway, maybe I made that up. Maybe I don't know. Maybe I caught a tail end of a conversation where he was saying that you said he looked like James Franco. Guys, I'm not going to sit on a broker stream talking about another broker. It's just not going to happen, yeah? NinjaTrader, obviously, thankfully, support this stream. And I'm not going to sit here and talk either positively or negatively about another broker. You can go to my Twitter, you can read my views on it, and we will leave it there. Kane will have his way or nothing at all, but I think he's moving too fast. Okay. Yeah, Shab called him Franco. We got 70 likes the last time I asked for likes. 72 likes now. So come on. We just need like 3 times the amount of that, and then we're there. T-Trades looks like The Rock. That's not T-Trades. Oh wait. You're going off the photo on Twitter. Yeah, fair enough. Broker or broke girl? Well, I don't understand the question. If I like it, will the market go down? If you like it, I'll help sell it down. No, I won't. That's a lie. I won't do that. Sorry. Do you get paid to do this? Yeah, $1 trillion. How else do you think I'm a trillionaire? I've gone over this so many times. Yeah, I paid myself about, I don't know, quite a lot earlier. 3 minis all the way up here. Someone do the math. I'm not actually going to open this bottom part of my screen because NinjaTrader doesn't TradingView doesn't actually let you hide an awful much. Here you go. It was $1 trillion, yeah. I'm not a massive football fan. I apologize. Who do I think benefits from direct coaching or mentoring trading? Okay, I'm going to be really honest here. If you find a good mentor that is willing to exchange their time for money, for a pure just you extracting information from them, you need to be at a certain point before you see a good benefit to that. That's it. You have to have a good understanding so you can really, the growth curve there is, you know, if you pay someone that's good to teach you the basics, you're probably not going to get the best value for money. And that's my truth. That's just how I feel about it. Some people may have a course that you can buy from a very good person that you can learn the basics or whatever. But if you come with the basic understanding of the concepts that person educates on and explains that and says, I understand this, I understand this, I understand this, they can help fine tune all the little things that help do it. But ultimately, and this is again, the reality is most of trading comes down to risk management and sticking to your rules. Yeah. That's it. That is like most of it. I can give you the best model. I can tell you exactly when to enter, exactly when to exit, all those things. If your emotional scale inside of those areas is very high, very low, very high, you're going to do really silly things. Do I scalp at all? Yeah, but look, they're just, you know. How many pairs do I trade? I only trade NQ. I just don't even trade a singular pair. I just trade one asset. That is it. Tracy, how are you?
Hey, I come to deliver your favorite data.
I'm
Crude
going to apologize for
inventories.
that.
You better be nice this week, else I'm confiscating your swag bag.
Okay, deal.
All right, so crude inventories, we have a build of 2.553 million. We have Cushing at plus 681,000. We have gasoline at minus 1.6 million. And we have distillates at minus 3.54 million. And that is what we have for today.
Thank you, Tracy, and apologies for my my probably dry sense of humor last week that probably came off a bit rude in hindsight. So yeah, I apologize.
Oh,
And I'm
good.
gonna hold out. I will trade. I will start to trade oil on your behalf to compensate.
Oh, fantastic. I would love it.
Appreciate you. Yeah, again, last week in hindsight, when I watched it back, it was really rude. So I didn't mean for it to come off that way. Man, it's just starting to pay myself trading, but I'm looking to scale capital. Wow, look at this price action. We really haven't gone anywhere since 10 o'clock, eh? We're just back at 10 a.m. open, and it's half an hour. We've just literally gone sideways. Oh, Tracy has to read crude oil but during my streams because it comes out at 10:30 every Wednesday. So that is a regular thing. We're at 600 likes now. Sorry. Anyway, you want to scale capital. Obviously, I personally think the best route to do it is via some of the retail props, but you have to understand that the odds are stacked against you, and you're probably not going to get paid as much as a lot of people insinuate you will. You know? That's the truth. You've never asked me this. Do I think that trading is 10% technicals and 90% psychology? I agree with the saying. I don't agree with the percentages. I would say it's more like 75-25, right? You know this. I know this. Most people know this. You can explain to somebody the exact way a market moves if you know that information, or you can explain all the things that characteristically make that up and all the things that they should look to exit and enter. The reality is that if that person is very emotional and over risks or expects, oh, I've had two losers, the model always says this, it's like very irrational people in trading make and lose a lot of money. That's it. And to echo what Merritt said yesterday, your number one rule as a trader is to make sure your winning days are, on average, are larger than your average losing days. And I will admit, very early on in my career, my average winning days, I could go on a very consistent period. Again, probably something everyone will agree with is that you have like 10 winning days and the one losing day wipes out 15 of your winning days. You just really have to curve this one down. And it's, once you figure that out, it's sometimes a bit too late, but the earlier you figure it out, the better. And again, I can tell you just to follow your rules and stick to your risk management and walk away. But actually doing it is 100% of the work, you know? Wow, we caught the move and then this has gone nowhere. I think the longer we stay here, the more I'm expecting that pop and then that retrace. Yeah. Yeah. No. Depends on how long before FOMC. It's also important to identify low probability setups. Like this one. If I limit it in, I'd be great, but I'd probably be break even here. I'm now underwater. I just feel like it's... Yeah, I mean, the market was a chop fest. However, we caught a nice expansive move. We caught it down, well, 444 points. I'm going to take that as a sign from the universe. Yeah, I am. That's really coincidental. Anyway, we popped above the opening range. We're just holding it. I just want to see us trade up into this area and then lower. That's not really it. Wow. Cold brew just appears when there's free stuff. What's that about? You weren't here to support me earlier, especially my friend. Yeah, look, I'm actually more interested in CPI tomorrow than I am FOMC because it's tomorrow. I think they're gonna. I think they're really gonna put. I think the print could come out horrific tomorrow for Powell and put him in a corner where he may not even be able to lower interest rates. Again, forgive me. Daddy told me his name earlier. I'm just really bad with names of people I actually haven't interacted with. But the gentleman that was on before Pharm this morning, he said, actually, I think that if Powell was really had his way, interest rates would go up. And I agree with him. I think he would. Yeah, the yield chart is crazy, guys. Like 10 years up 2% today. It's trading back above all of these highs, these Liberation Day highs. They're absolutely just killing it. The 30 is ripping. Power will be gone soon. Forgive me, I actually don't really understand the power of US politics all too much. But from what I do know is he can't remove him. Well, from the little I understand, he actually can't remove him unless he thinks he's doing a complete injustice. Exactly. But if the CPI print comes in bad now and it won't have tariffs, then they can't raise rates. They can't cut rates because they know that the next print is going to be bad. Look, I'm just saying, if inflation is bad, then the market is really gonna hate it. He's gone 2026. Is he though? Actually, that's when he leaves. Still sounds like a year of. Guys, I think we're giving him a pretty hard time. I think he's done a really good job up until this point. No? Do we disagree? Do we not just currently have a bit of a bitter taste in our mouth because he hasn't? I'm going to be really honest. I'm going to go out on a whim. I actually think he's done a really good job. I think he's done a really, really good job. No, I don't like it, man. I really don't like this. I think we're forgetting, right? The the stock market is completely leveraged on debt. This is not his fault. This is a tariff war. And now he's facing all of the pressure because Trump says you should raise interest rates or lower interest rates. I'm telling you, if he was to make an emergency interest rate cut like Trump wanted, the market would hate it. He gave us a soft landing. They've always been driving inflation to a point. Inflation has been coming down. We get a new president and the market fucking hates it. I don't think that's anything to do with Powell. Bro, I'm not looking at gold. You can spam that literally 450 million times. I'm not looking at it. Yeah. If I made the high, I would have taken it, but I don't like it. This is just, I need to see the pain. I need to trade the pain. Look, I don't know anything. I know nothing about macro news or politics or anything like that, especially US. All I really know is that I think he's done a pretty good job. Um, I think that we currently have this very, very recent bitterness of having a spotlight shone upon him that he's doing a bad job. But we weren't complaining about that when we were trading at 23K and Nasdaq was all-time high and interest rates were on the rise. We weren't complaining then, were we? No, we weren't. How do I draw standard deviations? I wait for this run. So this would be a standard deviation pull. Makes the high, takes liquidity, takes the low, impulse away. Standard deviation, -2, slight pullback, -4, aligns with the highs. I think this is why everything's just aligning to this high right now. We even need to see lower and then higher or higher then lower. We're just ranging right now. Like I was speaking about this earlier with a couple of friends. When we came here, I quite literally said nothing about this market screams big expansion. Either we're going to go back up into the range to then go lower, or we're going to go lower to go back up into the range. Yeah. Think tariffs. China imposed tariffs. We're 180 points above that. Yeah, Ryan, I would have. I would actually, that's a lie. But I'm streaming. If I'm not streaming here, I'm streaming inside the lab till around this time anyway. So I will always hang around till around 11:45, 10:45, 11. Sorry. I'll always hang around there because if this does present an A plus setup, we trade into this high. We have like a 5-minute inversion, some SMT from previous. I would take that and I would just trade it back in. But if it's a loss, then I'm out. Yeah, fair enough. I just think that honestly, I think the market is poised for the CPI print tomorrow or some positive tariff news. And until then, we're just going to go sideways. SMT actually stands for smart money theory. It just is divergence. Yeah, that's it. Anyone got any questions for me to go over something? We can take up the last 15 minutes of this because this is honestly, it's going to be pretty boring if we don't. The extreme volatility comes from thinning of spreads. Like the market gets thinner. So if we just imagine it like a book, how am I going to draw this? I normally get my iPad for this. Where orders might normally look like this, they now look like this. So when we jump from here, it just jumps. Where before it might do this. And these moves are just bigger. VIX is up. Obviously, there are more market participants, I would imagine. Again, I don't read volume that much. Actually, I don't read it at all. So I can't actually tell you Yeah. I don't support any football team. That's not me being impartial. I just genuinely don't. Yeah, no one wants to be involved in the market. They don't want to be buying an asset that they're not bullish on potentially. Also, unwinding. Yields are really pushing up, which means people are risk off. Don't want to be risk on. Bye, Tommaso. Happy birthday, by the way. I know I already told you, but happy birthday to 2 degrees in the chat. My favorite British beer. Again, I'm not really a big beer drinker. I'm a big wine guy. Am I looking for a new lover or to adopt someone? I can't imagine ever adopting a lover. That would be kind of weird. Charlie, that is pretty much all I do, mate. Yeah. Someone, I've been asked a few times what I do outside of trading and what are my hobbies. What I do outside of trading, not a lot. I live a very simplistic lifestyle. Like for example, after the stream, I'll do a bit of work and then I'll just chill out, cook dinner, and chill in my garden. Maybe go see some friends, go out for dinner with my family. I don't know. It depends on the given day. Weekends typically spend going actually into central London, doing something. And I travel a lot. That's pretty much it. Bodybuilding with the mates? No. I read that before it got deleted. That made me laugh. Anyway, it's gonna get deleted again. What t-shirt, hoodie, steak? Bitcoin's gone with the wind. We didn't look at Bitcoin last week. Let's look at it now, right? This was a short I took on Bitcoin. We had that big bounce, then we're kind of just dropping off. It's looking like these three lows. Ignore the SMT indicator. It's looking like these just three drives into this key area that I want to see. It's around that weekly support level. Big gap up. Three drives into this. Around 50% of the range. Don't know why, but this... Oh, it's because logs on. I'm about to say, this does not look right. But this also doesn't look that right. Which means logarithmic is on. Brabus petrol bill is as high as the VIX. I don't know how high is the VIX right now. No, the petrol bill is pretty high. Been to London once? You hung around Heathrow? I'm going to break your heart, bro, and tell you that's not even London. When I talk about London, I talk about like central London. Yeah, I don't know. I really if ETH starts to accumulate below 1500, I'm gonna buy it back. I'm gonna be honest. Mm. Well, guys, I really apologize because other than the push up at 9 to 9:45, we've officially gone nowhere. This is just barcoding. Yeah, bit sad, really. Kane's a zone one guy. I am a zone one guy. Yeah. I think you guys just need to understand, right? I actually said this to someone that I've worked quite closely with that is really aspiring to be a trader. That they're finding the current market conditions really hard. And my simple response was, well, no shit, because it's really hard. And the volatility is really high. This is a monstrous drop. And the things that all of you backtest on a regular basis is not this current market. So you're applying a data set to something that is happening in real time. And it's really hard because you haven't backtested these drops and massive volatility. You just haven't. I just know most of you haven't done that. What does your model say when VIX is above 50, your win rate or loss rate goes up or down by what? You know? Why don't I take that 1 minute inversion? You wouldn't have said that if we got stopped out though, would you? Do you know what I mean? Everything makes sense in reverse, right? I wouldn't say it's once in a lifetime. Maybe. I don't know. I think volume was pretty high during COVID. It was just over a long period of time. Guys, I'm going to be honest. Everything you see on my screen is everything I use to trade. That's not to say that that won't change over time, but right now that is exactly how it looks all day, every day. It was extended for this amount of time though. Bro, we've been here for 4 days, 5 days. We started dropping last Wednesday night. This is a week, my boy. We've been here for a week. The COVID drop lasted a year. You had rallies, but it... Of course, this was 50% at its peak to its low, right? I think. No, 34. So the drop is more violent, and it's definitely there. But like some of these days were just as bad. Actually, that's a lie. They're not just as bad. This move here alone is monstrous, but this to this is horrific. So yeah. Oh yeah, why did I measure that one? This is COVID. That is insane. I can't believe I didn't see that. Yeah, it was 50. No, it was 25. But like, this happened over a month, a little over a month. So imagine we are here right now. Ignore the percentages because obviously the number is a lot higher and a lot lower, but $10 candle, 10% candle, 10% straight back up. Do you see the point? It's just like these moves were just as violent, and then it started to really consolidate, just went straight up. Yeah, sorry. I don't know why I just immediately went to 2022. Anyway, let's just wrap up. It's dropping. The 1 minute inversion held. Everyone's like, why didn't you take it? Why didn't you take it? Not really. I pivoted to futures a lot later. What do I think midnight open is such a magnet? I just think it sets a good tone for where we are for the full day. Opening range traders are now back underwater after rallying 300 points. All transparency, we take this, we reclaim. I would long to hear. Stuck with your sell bias. Good shit, bro. ES is back below 5,000. I just want to see ES recover 5,000. Let's take this low and then trade a bit higher. Yeah. I don't think macro times work now. I think they're just open and close of 4-hour and hourly timeframes. COVID? Not really. I traded a lot of crypto during COVID because it was that shit was crazy. Like a lot. So yeah. I kind of went from CFD FX to crypto about 2020-ish, like just literally just after COVID. No, I don't have a degree. I don't have a I don't have a degree. Never went to university, straight out of school. Yeah, it was pretty crazy. The truth of the matter is I have a very high risk appetite, and that makes for crypto is just the riskiest thing you can do. Trading random meme coin in your pants at 3 a.m. making and losing a significant amount of money. I bought QQQ puts and yeah, I'm out of them. They were in the money at, and you can just go to QQQ. Here you go. There's a red line somewhere. Where's the red line? I think I sold them. No. Where did we buy them? This is yeah. So we bought them here, 470, and sold them Thursday, Friday. So we sold them around here. And the strike was 450. So when we gapped down on Monday, we were huge in the money. And then yeah. What was it, Friday? I don't know. We gapped down on the Monday. Yeah, we gapped down. And then on a Tuesday, I think we sold them around here. Held the opening range so far. Yeah. Tell me. Opening range traders, are you still in your trades? Or would you get stop break even here? Get paid, cut it, move, flat. Where was it? QQQ is just the options of. I'm gonna be honest. I'm not that proficient with options. I just call up someone that is. I'm like, I want to short this to here. Don't want to time exit. This is where I'm expecting it to go. Done. And they're like, right, buy these, do this, do this. How much you want to put in? Buy this many. Done. I stick to what I know, what I'm good at, and options. It's not really it. Getting ready to break down. Oh my God, you could have just marked the bottom. Yeah, it's underlying stock, but you can just buy options on it. It's ETF, yeah. Sorry. Oh yeah, I don't want to speak on it and pretend that I'm an expert in options because I really am not. Nope. Answer your question. Single night. Nope. Jim,
Kane,
sorry, I
how
didn't
are
see
you?
you. Yeah, good. You?
I sneak up on people sometimes.
Yeah. The thing is, I don't have Zoom on my screen anyway, so I can't see you. And then I just saw you on the stream.
Well, yeah, you're not missing much, but good job today, man.
Yeah, I appreciate you. Yeah, it was nice. We caught a nice long pre-market, and then kind of looks like we got out a very good time. Obviously, I like to let those trades breathe, and yeah, now overall I'm bullish for the day. I want to see that draw hit, but I probably won't touch it now for the rest of the day.
Yeah, no, I hear you, man. All right, but it was a good session. I think I learned a lot. I actually take notes when you guys are talking. It's a good time. So it's a lot of interesting stuff, great content. You're gonna be back next week, correct?
Next Wednesday, every Wednesday. Yeah, appreciate you, Jim. Good luck. And I'll see you next week.
All right, everybody. Trader Kane, you can follow him on X, formerly known as Twitter. So I'd suggest a peek at that. In any event, let's talk about some midday markets right now. It's almost a deja vu of yesterday. Let me just pull up a intraday 30-minute E-mini S&P chart. And just to refresh everybody's memory, we had this initial balance low approximately 49.81, and then the initial balance high back up to 50.88. A huge range, right? But then we had after the initial balance is over, then we are having the sell-off, and we saw this yesterday, right? This shouldn't surprise anybody. This was pretty similar anyway to yesterday. The other thing that was interesting was the London session, right? So, the highs were a little bit less than here in the US, around 50, 56 on that initial balance. And then the lows were a little lower at, I'm going to eyeball this at 49.42. So, we kind of had that bump up here in the London session, sell off, bump in again in the US Open. And now we're kind of hovering just south of that 5,000 level put support, right? And I'm just going to put my crosshairs there so you could see it. Let me make my crosshairs light up a little bit, guys. Hang on a second. All right, I got a little red crosshairs now. Thomas Barlow, good to see you. Thanks for being here, man. We have some old timers, not old. I don't know how old Thomas is, but he's been with us for a long time. Appreciate seeing you. The volume profile is interesting too here. We have a nice healthy point of control. This is not a perfect volume profile, but a healthy point of control at 50.33 1/4. If you go back down, we have another volume node though that we accumulated mostly overnight around 49.32, which also could be a target. So some of this volume could fill in. This is a session volume profile. I don't have it anchored to the open just yet. Once more data pops in here, I will. But I mean, we're this is a really amazing kind of initial balance range that we're in right now. And some stats here, I have some stats from our friends at Hedge I wanted to share with you. And I'm looking at initial balance breakout. That said first 60 minutes for the E-mini S&P. And initially I looked at it from 3 to 11, right? I'm looking at the London session. And we look back to year to date, not 6 months, a year, 2 years, 3 years. You could do all that stuff. You could customize your look back. But the percent of the time we had a single break outside of these purple lines was 38.46%. The double break odds were 61.54%. Now, the break is defined as a 30-minute candle that closed either above or below. So right now we have no break on that London initial balance. And then the same stats different stats though for the US initial balance. Those are those white lines, right? And the top is at the pivot, by the way. That's like a double point of interest for me. We didn't even get to Jax 1, by the way. Jax 1 is 5,100. We fell short of that objective. And we don't have a body of a candle closed just below. Let's double check here. Hang on. The exact low was 49.82 3/4. This candle's low was 49.80. Hang on, I forgot the first one. Yeah, so we did actually. All right, so we have a single break going on here in the barely by the skin of our teeth on the U.S. initial balance. And so those odds, if you kind of look down at my chart, I kind of added them both. Those percentages based on again year-to-date look back on a Wednesday too. By the way, I'm defining this as a Wednesday. Was 84.62% of a single break. All right, we have that. And then only a 15% chance, 15.38% chance. I shouldn't say chance. I always say chance. Based on the look back, 15.38% of the time, we had a double break. So right now, just looking at those percentages, one might say, well, we're not going to get a candle close above the pivot today. Well, we could, right? We could. This, again, 15.38% look back did, but it's kind of skewed a little bit. So you got to think about that as well as you go forward here. Bottom of the value area, it's approximately, it's kind of in no man's land. It's by a blind spot, though. This is a Menthor Q blind spot around 49.50. Remember, think in terms of 50 chunks of 50 in the E-mini S&P. At least I do. I'm thinking about chunks of 50 in the E-mini S&P these days when I'm thinking about candle sizes. And I'm looking at the 30-minute candle. Veldon asks, is U.S. initial balance 9:30 to 10:30? Yes, that's how I look at it. And that's East Coast time. So when that bell rings, boom, that's when it starts. The clock starts, and then that first hour kicks in. And I have this white lines kind of trying to flank it so we could see it a little bit better on the chart. So right now, none of the limit down levels are really in play, I don't think, as we're kind of going sideways here. And again, we're driving back up to that point of control. Let's do the same. Let me move this guy out of the way. Let's do that same exercise with the micro NASDAQ. I know a lot. It seems to be like the most popular. It's like the most popular market now is the micro NASDAQ for some reason. I don't know. It used to be the E-mini S&P, but not anymore. And pull that back down. So a lot of options lines, a lot of lines to consider. We did kind of wick through that Jax 1 level, which was right next to the pivot. Again, that's a double area of interest for me, 17,500. We actually tagged, I think, the put support at 17,600. So, this is a market where I wouldn't look at 50-point increments. I'd look at 100, 200, 250 as kind of increments for candle sizes. And, the bottom of the initial balance right now is really framing the conversation pretty nicely. 17,187. The top of it is at that put support level. And we do not have a candle that has closed beyond either the initial balance high or the initial balance low for the U.S. For the London, yeah, we do. We have a candle that closed above. And let's check out, where's my purple candle is hidden here. So way down here. And we do have a candle that closed below. So we have a double break. Let's check out the stats here. We have a double break on the London Open. And that says 61.54% of the time back from year to date. We have a single and a 38.46% that we'd have a double. Well, we achieved the double on the London session. The U.S. session, 84.62%. This is pretty much the same stat as we saw in the E-mini S&P. 86.62% of a single break, which we have not had yet, and a 15.38% of a double break. So it's kind of like, all right, we don't have a verdict rendered just yet, right? We're just like kind of sideways range bound. The volume profile is not that great here in the micro NASDAQ from a session point of view. It would be a lot better to add it from the New York Open going forward here. It's easy to do with the NinjaTrader software, by the way, with the order flow package. And then RSI is not helping me. It's kind of neutral right now, around, I don't know, 54-ish, give or take a couple ticks. So, the other thing that's kind of noteworthy here are these daily ranges, right? These daily ranges, 800, low to high. I'm just looking at low to high here. I'm not looking at ATR on the stat. I'm just looking at low to high. I use the ruler tool with the NinjaTrader software. And, we're talking 865.5 points. That's a huge range. I mean, this is unusual. We're trading in unusual times. And if I change it to a percent, this even gets crazier. The percent even gets crazier. 5.17% move, low to high in the micro NASDAQ so far today. I have never seen anything like this in my life. This is back to back days where we're having that stuff. So we have that 1 day min, that Menthor Q 1 day min that really, I'm really impressed with some of, I don't know what their calculation is. I don't know what their secret sauce is here, but you could see that's framing the bottom of today, right? We don't have a body of a candle that's closed below that 1 day min, right? Yeah, we wicked through it 4 times, but support actually held this time. It held pretty good, and then we kind of drove back up. Anything could happen between now and the end of the day, but that's a pretty solid area of support right now. On the top side, and just to, at the risk of kind of making my chart look a little bit more cluttered, I'm going to draw a rectangle up here to say, all right, this is where resistance starts, right? And you can see we wick through that Jax 1 number, which is the big options number, 3 times, like for an hour and a half. These are 30-minute candles, and now we're trying to get up there again as well. But right now, it just seems like kind of, hey, we're range bound. It's a big range. It's not a small range. It's a 400-point range. So it's definitely a tradable range. And then I'm sure there's some folks that are just ready for that breakout, right? We're looking for that breakout to the upside and, or downside. I don't know, depending on if you're glass half full or glass half empty, I guess. Um, In any event, let's keep moving. That's the story of stock index futures, right? They're kind of, you don't see any big dramatic numbers here. NASDAQ's the strongest. It's up 0.82%. The weak link would be the Russell 2000. It's almost down 1% at minus 0.91%. And we've seen that be the phenomenon. The Russell has been reacting more both on the downside and the upside in a more extreme manner than the other stock index futures. I think it's just a tad bit more sensitive to what's going on with tariffs, with respect to potential a recession, with respect to supply chain. That's another big one. Barack 70 says, "Yeah, we're ranging crazy lately." Yeah, and again, I've been doing this a long time, folks. I know I look like I'm really young, but I've been doing this a long time, and it's very rare. We're living through a very rare moment in time right now, and it'll pass, hopefully. Anyway. Let's keep rolling though. Some of these other markets are just incredible. Let's take a look at the crude oil just on an intraday chart really quickly here. So crude oil, it's down over 5% again. We're at a 50 handle right now. We've tested that 55 handle. The daily pivot, the daily pivots are great. S2 really kind of formed a bottom here. This is support right here at S2, and that's approximately 55.41. You could round it up a little bit. We have a blind spot 3. We've been trading through that the whole time. S1 was pretty good support overnight, but then we could just kind of, we'd forget about it. We broke down below it, above it, below it. So that's not very helpful at this point. But this Jack's 3 level is okay. Yeah, we closed above it a couple of times, barely. And the top of the value area, of course, is at 58.10. We never challenged that Jack's 1 level at 59. And I do know, and hopefully Tracy will kind of let us know what happened with that EIA report that came out at 10:30 today. So we won't spend too much more time on crude until we get Tracy in here in a couple minutes. Keep rolling down here though. Let's look at gold again. Gold's up $100. And there's no retracement here. There was a pause after this was interesting though. This was a little bit of a different scenario than expected. We had this, we didn't get trade lift during the London Open, right? And not for a while, right? So it was pretty sideways, pretty sticky, creating this really big dominant point of control that we're seeing at 30.62, right? And a lot of times dominant points of control do act as magnets. So if this thing does retrace back down, and we haven't had any retracements yet, that could possibly be a target or a place for stops or a place for entries or a place for profit targets. We'll see. I'm going to mark that in my chart and kind of remember this for later on in the day. So with other areas of interest here, we have R3. Again, it's these days when we get these R3s and S3s, it's amazing because these are rarely achieved, right? And we're almost to it right now. And that 3,100 even number is kind of a psychological number as well, and that's something else to consider. And I have a target up here at 31.16. That's a remnant from before. I think it might be a PAX line. Can't remember. I'll leave it there though, just in case it hits, and I could be like, "Hey, look at that! Remember my target, 31.16." Oh, I don't want to take credit for it. All right, let's kind of adjust this as well, just to see. This is the range today in gold. Listen to this: 4.12%. Where's the low here? The low print. Let me make sure I got it right. Let me just adjust it a little bit better. So the low print on the day, 4.02%, low to high. Again, it's incredible. I mean, we touched what? The low is what? 29.83. And now our high was 31. I mean, it was an incredible move up. and gold. So we'll talk more about this in a little while. But all the metals are up. All the metals are up, and we'll take a peek at silver really quickly here. Silver's above $30 again. You know, that $30 level is kind of another psychological level. But if you're looking at the, you know, 1-day max is right at that point of control. So that's kind of another interesting level. Let's go down to the treasuries, though. Treasuries, I think, are the story of the day. Story du jour. I think you say that. Story du jour, maybe. Probably no circuit breaker today. I don't think I've ever seen one, to be honest with you. So I don't know. But, you know, the treasuries are they're falling out of bed, right? Let's take a look at it daily just to get this in perspective a little bit better. I mean, this is a daily chart, and this is a wild daily chart. So we have long-term support, meaning ever since all of March, right? So February 26th, long-term support here. And so I drew the rectangle, right? And again, you know, depending on how big you want to make it, we don't have a body of a candle that's closed into that rectangle, right? We just don't have one. And but we have this huge rally up and then this huge break down, right? All the way back to where we started from. And this happened in, you know, 1, 2, 3, 4, 5 days. In 5 trading days, we've seen a complete reversal from what ordinarily I would describe as a really nice rally up. You know, I thought, okay, so this is good. This is telling us maybe interest rates are going to be a little bit lower. It's telling us that you know, the 10-year, the medium part of the curve or longer end of the curve is going to behave itself. It's an important benchmark for lending for a lot of different things. And but no, it didn't happen. I mean, this is a huge sell-off, and just to kind of measure this, high to low, 114 spot 1, 114.10. The low was 111 and 15 half. So that's over a 2.5 handle move, high to low, which is extraordinarily unique in this market. And right now, the continued sell-off is bringing let's see what the 10-year yield is. The 10-year yield now is 4.393. I think we saw it print over, I'm sorry. Yeah, 4.393. We saw it print over 4.5. And in the 30-year, we saw it print over 5.0. So that's going to cause it's going to raise some eyebrows if it continues. Now, we have some buyers coming in. We have this buyer's wick that came back up. We're right at that 50 EMA right now. We're just flirting with that right now. The 21 EMA is starting to arc down. The 8 EMA is arcing down a lot. So at a certain point, though, I think the Treasury market is going to be a little bit more stable than everything else when you think about its relationship with the yield versus anything else. And we could even look at the yield if you want. Let me just see if yeah, here we go. So let me get this out of the way. I'm just charting both, right? I'm just charting the 10-year. That's the purple line. That's the 10-year yield. This is the CME Group's micro yield. And then the 2-year micro yield as well. And it gives us a good kind of relationship between the outright treasuries and the actual yield. And so right now it's kind of, you know, we have a low in the 2-year. That low peak down here is like 3.87 below the, you know, just not too far below where we're at. And then the recent highs, this is the 2-year I'm talking about, 4.016. If you do the same calculus with the 10-year yield, we have this low peak here at 4.183. So we're still above that 4. And remember, this is a line on close chart, right? We're still above that 4.0 level on a closing basis. And then the top peak up here is approximately 4.37. So I would say, well, it's between 4.5 and 4.0, and that's the range we're in. We're kind of in the middle right now. And so this is kind of been going on for a while, right? This isn't new, right? You know, we had some higher peaks way back at the beginning of February, but those things sold off big time recently. So that's kind of the story of the 10-year. And let's just dig into the intraday chart really quickly here. This is a terrific, by the way, this is a terrific volume profile. It's got a dominant point of control. At 110.23, you have a kind of a nice shelf, if you will, at the top of the value area, right? At the top of the value area, then things taper off from a volume point of view pretty nicely, right? We were going from 57,000, 58,000 contracts traded around that 29 level. And then the very next level up, you go to the 30 level, and you're going to get 36,000 contracts. So that's a big drop off. And at the bottom, it's a little bit more beefy, I guess I'd say, until you get down to about 110.05 half. But that's at the bottom here. That's at the lows. So low wick is right at that put support. Surprise, surprise. The highs of the day were right at that Jax 3. And I think Jax 1, I'm sorry. I think Jax 1 becomes more important after your first couple of hours of Globex session last night. And let's see what else. One day min now. It's kind of in S1 and Jax 3. All of this stuff is kind of serving as resistance. I'm going to go ahead and draw a rectangle right now real quickly. And this will be an area that is it's going to be hard to get above this today, in my opinion. I could be wrong. It's going to be hard. This is really a solid level of resistance. I mean, we haven't had a body of a candle in that area, since midnight or earlier. So kind of tight, range bound at this point, I think, on this 10-year. This is going to be sensitive to news as well. So we got to pay attention to that as we go forward. Well, it's a good question, Barack. Barack 70, what type of confluences does options provide for futures? And I think they do. I mean, I think you have a situation where you have gamma levels, you have high vol levels that are based on the options market that provide really good areas of interest or targets or support and resistance levels if you want to talk about it there as well. And we could argue why that's true. The argument that dealers have to position themselves a certain way based on where the gamma levels are. Is it a positive gamma environment, a negative gamma environment? Negative gamma environment typically means we're going to have some momentum. We're going to have some movement one way or the other. That's not sideways, right? Positive gamma typically is more of an orderly price behavior, right? More of a sideways condition. So it doesn't really matter why these things work or don't work. It's for me, it's another area of interest on the chart, right? And when you have two or three or four areas of interest coming together, like this Jax 3 level, the S1, and the one day min, I know they're not the exact same price, but that gives me, an idea that this is an important level. It's going to be a hard level. Either it's going to attract or it's going to act as resistance in this particular case. So that's kind of my experience so far with these options. I don't know hopefully that makes sense. I don't know. All right, let's get off of this. Well, let me just show you really quickly though, the 30-year, because this is the longer the duration of the treasury instrument, the more it moves. So this is the 30-year, right? It's a longer duration than the 10-year. And there's even an ultra bond, right? Which is a true 30-year. I won't get into that distinction, but that moves even more. Let's just take a peek I haven't hit this button in a while. Let's see where this is, guy. This guy is moving. This is down 2.13%. This is the ultra, they call it the ultra bond. It's a relatively new contract. But people who love trading the long end, this is great. But it does have a bigger average true range, a lot bigger, and which means there's more risk, right? So you have to be careful. It's not a small market. But going back to the traditional 30-year, we broke through that double bottom here, this area of support, a big time yesterday. We kind of above it though, which kind of gave me that little double bottom kind of peak. Look at today. We're trading underneath it. This area support's now become resistance. We have this really low, really crazy wick here. Buyers did bring us back up here, though. It's a little bit encouraging. Remember, today at 1 o'clock, there is a 10-year Treasury auction. And that could, especially in this environment, that could kind of move things a little bit. I think it's 38 billion, as I recall, being auctioned. Tracy pointed out earlier today that there was um, some earlier auctions earlier this week, on a smaller duration, wasn't that great, right? So we'll see what the appetite is for these 10 years at these lower prices, right? They're going to be lower prices, which means they should get some higher yields. So maybe there'll be some relief there. I don't know. So in any event, that's the story of the Treasury bonds. Let's take a look at the Bitcoin really quickly. The Bitcoin. I love this market. And I like, did you see Jim Bianco this morning, you guys? He had a great story. He had a great analysis on Bitcoin. He called it a speculative market, and I don't think there's anybody who would doubt that it's a speculative market. You're not going to get delivery, of Bitcoin. A truck's not going to pull up and give you little coins, right? It's not, you're not, it's a cash shuttle thing. So it is a speculative thing. And, what was interesting, what he said was that, once it becomes less speculative, once a lot of just the random speculation comes out of it, then maybe it could become a flight to quality instrument. And we're seeing that in gold for sure today, up $113. But on Bitcoin right now. So if you think about risk off, well, where are you going to take risk off? In addition to the equities, maybe you're going to do it. Maybe you're going to do it in this market as well. So we're seeing. We're surprisingly low, right? Because up till now, let me just move some of these rectangles around a little bit. Up till now, I thought we had some pretty good support. I thought we had some pretty good support right around that 79,000 level. Well, last 3 days, no, we're below that. So I'm moving my rectangle over here and saying, all right, so we should have some, buyers are coming in the last 3 days. You can see those kind of buyers wicks today and then two sessions ago at approximately, 676 half. We'll just round it to 76 half. So is the bottom in yet? I don't know. I mean, we have kind of a doji looking like candle here. RSI is at 38.54. That's not particularly bullish in my mind. And the slope of the recent RSI is sloping downward as well. So that's moving averages are sloping down. Everything's sloping down right now. So again, I'm kind of in a bearish imposition here. I'm going to extend this rectangle a little bit more, and before we go over to the intraday. And so the bodies of the candle are relatively tight right here. So I wouldn't be surprised to see sellers come in up at 79.5 and buyers coming in at the bottom of the rectangle. Griffin's in the house. Griffin, good to see you. Been a long time. Appreciate you finding your way to the new NinjaTrader Live. Good to see you. Let's kind of move down to that 10-minute. I'm sorry. I'm so used to saying 10-minute. I'm a 30-minute guy now because I can't fit so many bars in the screen anymore with all the gamma lines and all of that stuff. Again, 30-minute candles, a 30-minute peak. We have that same kind of initial balance. We're still trading in the middle of the initial balance, just like we are in the equity markets. The bottom frame of that 76,840. The top frame is that wick right up there, pretty close to 78,500. You have a jacks level up there. You have a blind spot up there. So again, it's a double area of interest. And sure enough, we almost got there. We're just a little bit short, but that's okay. The pivot also, we've only wicked through the pivot once, and the jacks one level at 78,000. Right now, we're trying to get there again. We've almost got there once. Two of the last three candles we did get there. Right now, sellers are just pushing us down off of that jacks one level, and that's the most important gamma level, right? Gamma exposure, they call it. Griffin. I'm having fun, man. I don't know about you. I am definitely having fun. So this is the story of the Bitcoin. So we'll keep our eyes on that. Currencies, we haven't really talked about currencies a lot. Just kind of looking at my currency board here. We have, I'll just go down in order. The British pound sterling is down, it's almost unchanged. The Swissy is up again, 0.82%. Again, this is my risk off barometer. Every time I see a green Swiss franc versus the US dollar print, that's my risk off barometer. And I'm not just making that up. I think other folks have identified that as well. The Euro FX is, negotiating right now, and is up 1% over the US dollar, right? This is the Euro FX US dollar cross, and that's green. So it means the dollar is a little bit weaker. Canadian dollar, same thing, up about 0.43%. That's also green versus the US dollar. Aussie, same thing, 0.8%. Yen, Mr. Yen is also positive, a little over 1% for the second day in a row, I think. So this is that's an interesting. Again, that's another barometer. The yen's always red. It seems like it's always red. So when it's not, that's another barometer that maybe there's some more risk off there as well. And then the peso's down over 1% as well. Again, this is a tariff country. They're all tariff countries at this point, right? There's no way around that. So let's just really quickly just go over to a daily here. If my charts cooperate, bear with me while I get my data going here. And the risk of freezing things up. I'm going to hit that Euro FX, let it populate as well. So this is, the U.S. dollar is considerably weaker versus the euro. So my whole Sicily trip, I'm going to be paying more, right? So we started this rally back on February 28th, and it's been a spectacular rally with only this small little pullback that we saw starting toward the end of March, right? And then we kept going. And so, yeah, there's some sellers wicks up here, sellers wicks, but this is driving higher right now. If this body closes, this will be the highest close we've had for a long, long time. There's no real retracement in play here. The moving averages are moving up pretty strong. The RSI is at 67.41. It's not overbought yet, but we're getting there. And so the dollar's taking a hit versus the euro right now. I don't know if that's a good thing or a bad thing. I'll defer to Tracy on that. But the trend is clear and present in my mind, right? Is clear and present. Oh, I just saw that note. Thanks, Austin. I should probably pay attention a little bit more. In any event, we could try to drill into an intraday if you want. Again, a lot of folks trade. How many of you guys trade over-the-counter Forex? It was all the rage in the 2000s, right? It was all the rage in the 2000s. There's so many benefits to trading the futures, Forex, I'll call them, Forex futures. I don't know. I think that's a good word. Currency futures, I think, is also a pretty good word. But I won't go into all the benefits because there's a ton of them. But really beautiful volume profile here, almost textbook. Nice point of control, dominant point of control. It's in the middle of the profile. It's in the middle of the value area. Those are one standard deviation of value. That's the light orange is shaded area, and we're tracking one spot 1090 there for that point of control. On the London top of the initial balance, we just barely closed above it on one candle. I'm not even going to count that. The bottom of the London Open is a really nice bottom for this market. To be honest with you, we don't have a break there as well. And we certainly don't have a break. And we can go back to that edge full. I don't have the edge full stats with me on this, but we can go back to those edge full stats and look at exactly what this means. But right now, we're again range bound here as well within the initial balance, U.S. initial balance open. So, and we're seeing this in many, many markets. So like a lot of this price activity happened overnight, and it's like, all right, the bell rings in New York. there's not a lot of news coming out until later today. Like I already mentioned that 10-year auction, but also I think the FOMC minutes. I almost think the FOMC minutes at this point from the last meeting are irrelevant. Give us a kind of a peek behind the curtain of what everybody was thinking. But at this point, so much stuff has changed from the last meeting that you got to read. I'm going to read that with a grain of salt. So I don't know if it's going to be a market move or not, but that's what we got. There's probably some Fed speakers out there chatting away a little bit. And just checking my notes here, guys. Vlad says he was introduced to trading via OTCFX. Yeah. So, the nice thing about CME Group's markets is it's a regulated exchange, and the order book is disclosed. There's only one order book for this market. There's not a bunch of dealers in the middle. There's not manipulation of the data stream like you'd see with a market maker or an OTC environment. There's no carry interest overnight. There's no settlement, T1, T2, T3 settlement that you have to worry about. You could immediately go short, or you could immediately go long if you're flat, whatever you want to do. And so all of those benefits plus benefits over the restrictions that you get and some of the over-the-counter markets are just are worth it. I mean, right now the E-mini, and there's micro contracts here too, guys. The 285,000 is traded in the Euro FX right now. That's a pretty liquid market. That's a good market. Even the micros have traded 59,000. So remember the currency pairs at the CME, they start with the number 6. They start with the number 6, and then the letter associated with the country. Why 6? I have no idea why 6. It's just something that's there. Short life hacks. Yeah, they're troublemakers. I'm not even going to say their name out loud. Oh, my goodness. All right. So, Michael Mielo is with us. Good to see you, my friend. Atlanta Fed GDP raises its Q1 GDP estimate from minus 2.8% to minus 2.4%. Well, so that's suggesting is this for Q1? Yes, for Q1. So, because they kind of do a nowcast, right? They do a nowcast. That's a recessionary number, negative GDP, right? Some would argue we're in it. A lot of talking heads on TV argue we're in it. Who knows if we're in it or not? But we'll start getting this GDP data coming in, probably a little hot going forward here. Let's go back to the E-mini S&P and see if anything's changed since we started. Yeah, short life hack. I mean, the regulatory scheme changed considerably for over-the-counter forex in the U.S. in the aughts. I don't know exactly what year, 2006, 7, 8, 9, something. Probably 2008, 9, or 10, which kind of put the kibosh on the euphoria. But I know it's still a very popular marketplace for sure. So E-mini S&P still hasn't done anything. I mean, we're kind of like, all right, we're hovering still exactly within that initial balance right now, right there. So what is this suggesting? This is suggesting possibly that we are still right now, we're in a news-driven environment, and a new policy regime has been started, something we haven't seen before. And so there's no news right now. So the market's just happy right now. We're just kind of hanging out. I mean, this point of control is pretty dominant. Let me move my little tag out of the way here. Excuse me a moment. So again, look at how many candles have traded through this point of control. Remember, these are 30-minute candles. 1, 2, 3, 4, 5 times. 5 times. That represents, what's that? 2 hours and 10 minutes. 2 hours and 10 minutes. We've traded through that price. So a lot of times when there's no news and you get a normal distribution, the dominant point of control like this, well, it's like a magnet. It attracts price until it doesn't. Right now, eventually we're gonna stray off of this. Maybe not today, even. Who knows? Maybe today, maybe as we speak. But until then, until that happens, that's going to be a key area of interest for me as I'm thinking about this market. The one thing I'm missing real quickly here, do I have time? Yeah, I have time. Is to draw a fib line. Let's do that. That's my last piece of the ingredient. Griffin, you know the action is good when the wife brings you lunch at the desk 2 days in a row. No idea when we ate lunch at home for 2 days in a row. That's hilarious. I'll tell your wife I said hi. I had the pleasure of meeting her once down here in Charleston. Um, can't wait to see you again, Griffin. Let's just go high to low on this little. I'm just going to. When did the rally start? Rally started here at the 8:30 to 8:40 candle. So before, pre-market, and it ended at the high peak at the pivot. And so right now we're interestingly enough, now that I just put this here, we have a 50% retracement right at that put support. And let's see, one, two, so three of the last five candles have traded there as well. Now, the bottom of this is another interesting phenomenon as well. The bottom of the initial balance is right at that 61.8% retracement as well. And I think this kind of calculus works a little bit better on daily charts. But what I'm going to suggest is kind of like a VWAP. If we get a candle close below 61.8%, and we get a confirmation candle, then this would be a turnaround in my mind. And this fib wouldn't be any good anymore, I think is what I'm trying to say. So it would be a turnaround in direction right now. Again, though, we have to break through that floor, which is not going to be easy right now at 49.80 with that, the 5,000 level is sticky. It's also a kind of a psychological level, that 5,000 level, in addition to a key put support level. So we'll keep our eye on that as we continue to go forward here. If you're heading north, Griff, give me a call. Charleston's a great place to grab a coffee or a beer. Easy in, easy out. What else? What else do we have on the horizon? Let's take a look at the Russell again. This is like the weak link of the stock index futures. Let's take a peek at the mighty Russell here. And before we even get to the intraday, let's just take a peek at the daily chart really fast. I mean, this is, oh my goodness. Let's go peak high. I haven't done this one in a while. Peak high. I'm eyeballing it, right? Around 23.36. This is a continuation chart, not back adjusted. And I'm going to kind of just put the bottom of this range to where we're at right now. We're down 25.52% based on my math in the Russell 2000, right? This is, if I'm thinking about my trading plan coming in the morning, am I bearish? Am I bearish? Am I bullish? What's the weakest market? What's the weakest stock index future? What's the strongest stock index future? Well, if I'm bearish, this is the weakest stock index future, right? And it should be based on what's going on in the economy and everything else with interest rates. So this is way, way oversold though on the RSI. It could stay oversold for a long period of time. I mean, go back to end of February, we had a sub 30 RSI for 3 weeks. So just because it dips down, that's not a trading strategy in my mind. Boom, we dip down past the RSI, it's oversold, it's time to get long, especially not on a daily chart. No, it could stay in that kind of low level for a long period of time. So be careful with that thought. Across out above the 30 could be a different story. When you see the slope of that RSI is important too. You see a high slope up and out of 30, then it's giving you a suggestion. Hey, and I think it works better on an intraday chart. And here's an intraday chart right now. We have this again, nice point of control. Now the difference here is we're trading south of the initial balance, right? Put support and 0 DTE put support at 1750. We've been trading through that number a lot today. But really, where I would draw my rectangle, my area of support here in this market would be right here, and we're tapping at it. We're knocking on heaven's door right now. So we'll see if this holds or not. We have a 1-day min down here at the blind spot is a good target. We have S1 that's held really nicely for the session support. Oh, boy. Well, thanks for being here with me, guys. But don't leave yet because the best is yet to come. We're going to bring in Shy Girl with me, and we're going to talk about some hot commodities in about 2 seconds. Oh, here we are. Shy, good morning. Oh, having trouble hearing.
Can you hear me now?
I hear you now. I hear you
Can you hear
now.
me now? Woohoo!
Yeah.
All right. All right. Let's let's talk some commodities. Yesterday I wanted to go over corn, but we didn't have time, so let's start with that one today. Because what I find interesting is, remember when we were talking about corn's just not going down on bad news? If we look at this market, I mean, we're down, $1.50 today. I mean, so little today. On top of the fact that we just had China come back and say this morning that they were going to raise tariffs on the U.S. from 34% to 84%. And yet this market still seems to be hanging in there and hasn't fallen as drastically as we have seen in some of these other grains. So, the chart's looking pretty bullish, kind of. But what are you seeing here?
Yeah, so this is, and I didn't really think of the tariff thing here until you mentioned it. But we have a really nice area of support down here around 450, and it just seems like this is inching up. We've broken through all of our moving averages. We're sitting above the 50 EMA, and yeah, maybe the China thing has slowed its roll a little bit with this doji right here. But I'm not too worried about it. I mean, we have a pretty high new high right now at 472 on a daily chart, and the RSI is kind of in the middle at 52.9. I suppose what I should do, and I'll do it on the fly here. I'm embarrassed I didn't do this yet, but I'm gonna go ahead and just put a fib line in from that peak high to the peak low, just to kind of see where we're at. Right. And we wicked right to that 38.1%. Not surprising here. I would like to see a close above that though, before we, I don't know if we want to celebrate higher corn prices or not, but before I would expect higher corn prices. And then on the intraday, remember the hours are different here than they are on some of the other markets. We're sitting on the pivot. I think these floor pivots work great for the commodity markets as well. That JAX1 level is right at 470. We traded through that most of the day. Maybe we'll drive back up there. Maybe we won't. Nice, healthy point of control further north as well. So I feel like the bottom might be in. We have a lot of big wicks, a lot of big buyers wicks at the bottom in this chart. So we'll see. We'll see if it holds support at the pivot.
Well, farmers certainly would like higher corn prices. They have been in trouble for some years. They are getting some assistance from the government, but if we're looking at these tariffs in the broader sense, that's going to make farm equipment more expensive, rising their input costs. So a little bit higher corn, probably good for farmers.
Yeah, Tracy, one more point. Hang on. Let me interrupt you for 1 second. One more point on the corn thing. My understanding is that Tito's vodka is made with corn, and so don't mess with me too much on this. We want to keep these prices lower.
Okay. All right, let's move on to our favorite crude oil market. So, we're kind of stabilizing-ish at this 55 area. The report today was not too bad. We did have a build of just over 2 million barrels, but that was expected, so no surprises there. What we did have a big surprise was the draw in distillates and gasoline. In fact, our distillate stock is 9% below the 5-year average for this time of year. So clearly demand we're not seeing anything hit demand as of yet. But, market's still, sitting kind of on the lows, potential for more downside. Yesterday, it was kind of looking like we could have cleaned up that profile, maybe gone it back to 65 to kind of clean up that drop. But it's kind of difficult for this market to get a bid here. What are your thoughts looking at the chart?
Yeah, I mean, if I didn't even know this was a crude market, let's just say it could be any market, I would say, I would kind of bring out my inner pit bull and Keisha and say, we're going down, I'm yelling timber. But, I know there's some real constraints to the downside here. The good news is we have a nice buyer's wick today, although we had it yesterday, and the day before, and the day before, and that didn't really matter. We kept going down and down. So really, I think we need to see, right now, I feel like we're still in a bearish market here. The candle formation itself is not bad if we could kind of move up a little bit higher today, but I'm not going to hit the buy button today just on the basis of that. If I look at an intraday chart, 30-minute, we have the pivot really holding nicely. That S2 level really holding nicely right now. There's kind of a floor here. And to frame the conversation on the top part, we really kind of peaked out during the London session, the London initial balance or opening range. And then that JAX3 level is also defining the U.S. opens high as well. So it seems like maybe today this market's doing the same thing as everything else. They're kind of like trapped in the U.S. Open's opening initial balance right now. I know the point of control is a little bit lower, but we're at that Mentor Q 1-day min level right now, which is pretty cool as well. So short of any new news, today, I'd be surprised if we break out of this today.
What's also interesting that came out earlier is Brian Sheffield, who owns an oil company, fairly well known, said at $55, he is going to delay drilling, and he encourages other producers to do the same. He said it's a bloodbath out here. He has shale fields in South Texas and North Dakota. He said the industry needs to cut immediately and hunker down to let the tariff war play out, quote unquote. So let's see if oil can hold that 55, maybe because he came out and said that today, buyers came in at that 55 area, but we'll see if that holds, certainly. And then let's go to the gold market, because gold's up over $100 today, and it kind of looked like, it was making a move down, but your rectangle, your support area, held. We talked about that a little bit yesterday. We were worried about, the candle that was forming yesterday and what that might mean, and if that was a pause. And certainly we have seen a massive run up, and so I'm wondering if we have investors piling back into gold after they were done selling for margin calls and raising cash, if it's pulled back enough that buyers are interested again.
Yeah, and as Jimmy Urio once told me, technical analysis is not voodoo. And this chart it really kind of speaks to that. We have this old area of resistance has now become support. I just dragged it across my NinjaTrader chart really easy. We have a 61.8% retracement from the way I drew this fib down, starting in the lows on February 28th. That's held. We had a body of a candle close below it, so we had our radar screen up, but we didn't have a confirmation candle. So from a longer term point of view, this was a pretty nice area. Then I have my trend line here, loosely fitting a trend line up here as well, that gold's kind of respecting right now. And this is a big candle. I mean, this is a huge candle today. I mean, high to low, 3104 on the high. The low is 2983. So that's I can't even do the math. $120. This is, in my humble opinion, a flight to quality candle.
Absolutely, and it's just a massive move, particularly for
Yeah,
gold. And let's
yeah.
look.
Hang on one sec, Tracy. Let's really take a look at the intraday really quickly here. Sorry, I stuttered in my chart analysis. My bad. Just high to low again, 4.07%. Forget about the points for a second. Think about percent. R3 is, again, it's rare you get to R3, but R3 is holding kind of as an area of resistance right now for the last 2 hours. We'll see if we could break that because we do have I think this was Pax's number, or maybe this was your number, Tracy, 31.1620 as a target on the upside. Point of control, though, is very dominant down here as well at 30.62. So any kind of retracement, if we get one, that would be a target. We're still within the initial balance range on an intraday chart. Amazing.
All right, so let's move over to copper. We haven't talked about this for a while. It still looks like that $4 is holding. Now, we know that we've seen a big pullback in this market because it's an industrial metal and there is fear of global recession. However, what fundamentally is supporting this market is that China has now come out and said they're going to do stimulus. Now, I know that they've been saying this, but we haven't really seen the whopper stimulus. But it seems like the market is buying the story this time because of this tariff escalation. So they did come out overnight and say that they were going to initiate actions that would basically support commodity consumption.
That makes sense. I mean, I know all the metals complex is up today, but that narrative definitely makes sense. I mean, when I look at this chart, we have the 80 EMA crossing under the 21 EMA. That's the fast moving average crossing under the slower moving average, and then again, this 80 EMA just crossing under the 50. And so when you kind of line these up with the RSI at the bottom, I mean, we're sub 30. We're still sub 30. And even to this minute, we're sub 30. So this is pretty bearish look. And if I drew a fib, we wouldn't even be retracing back up right now. It's not even worth me drawing right now. So yeah, this is kind of encouraging. I guess I would look at some of these piercing lines of the previous candles, which is kind of the midpoint on the body of a benchmark candle or a big candle, to see if we can get closes above it. See if we get closes above it, and then only then will I be like, all right, maybe we could kind of move up right now. But right now, this is just looking like if I didn't know any better, I would say these are buyers taking profit. It's time to get short again. So, but I think the macro narrative kind of supports this green candle, and just kind of drilling in really quickly to the 30-minute chart. I have a lot of lines on here. I know that 1-day max, it kind of serves a little bit as an area of resistance at the top. The volume profile is wonky. It's not very good. There's all of these different volume nodes right here, so it's a little bit more uncertain in this market where price happiness is. We have, a put support level at 44.2. And then in the JAX 1 kind of forming a base here, right? A JAX 1, I'm sorry, at 4.1 right now. But it does look like it's trying to drive up, though. It does look like it's trying to move up just at casual glance. One last thing I would add here is a rectangle, because we all love rectangles. And I'm just going to frame kind of where that whole area of resistance is. It's obvious, but I put the rectangles on there to make me feel better. So we'll see if we can get a breakthrough on the upside.
Excellent. So, and we've had a lot of buyers. If you look at the weekly chart, we've had a lot of buyers, since 2024. So well over a year in this like $3.94 area. So we'll see if it holds again, just because of the global demand in general for copper. I mean, I think, I don't see at any point where, China's just going to stop selling EVs or building EVs at all. And that's a major copper consuming industry. So let's move on. Let's do one more. Let's do silver, since we're in the metals mood today.
Where's my
We
silver at?
have
There we go. All right, we got it.
silver's up. Silver's up too, not as much as gold. I mean, it kind of, again, because of its industrial purposes, just like copper, it did see a larger pullback than, say, gold did, but also still hanging in there. So what are you saying? What do you think here?
Yeah, so this is encouraging, right? So we had some longer term support down around 29.23, and then into my next area of support resistance zone right now. We're trading into it, which is good. That's above that $30 level. This dominant benchmark candle here that we saw on April 4th, again, my eyes are going to be on that piercing line here. If we can get a close above that within the next couple of days, then I'm not going to be quite as bearish here. This is an encouraging green candle on silver. And if we just kind of shoot down into an intraday chart, this is a capital P as in Paul shaped distribution here. You got that long tail at the bottom, and then you have pretty much the value area at the top here is this volume node defining the conversation right now. Point of control at 33.5. And we did kind of break through the bottom of the initial balance. So I would probably frame the conversation pretty closer to the top part of the value area here for the rest of the day. And I'd be surprised if we had a breakout below or above these levels. I'm going to paint with a rectangle. We got to add another rectangle. I know we're out of time, Tracy, but hang on one second. Let's do it.
It's all good.
There's the hamburger bun right there.
Excellent. We will keep an eye on the hamburger bun. And, I mean, it might just stall out here and go sideways for a while. But, I mean, I think holding 30 is going to be key for this market.
Yeah, no, I agree. And everything seems to be a little bit pausing right now. And I think to your point this morning, you and Deli, it's like we're in a serious news-driven environment, right? Technical analysis has taken a second place to this. So everyone's waiting for the next headline to pop up.
Tis true.
All right. Well, thanks for being with me for our hot commodities segment. I do want to remind everybody also, we're going to be back at 2:30 trading the close with the Order Flow Labs guys. These guys have been on fire, so it's well worth coming at 2:30 to see these guys trade, and they're highly entertaining, don't you think, Tracy?
Oh, man, absolutely. Great guys, just great guys.
Yeah. All right. So we're going to go ahead and take a quick break. Hopefully, we will see you soon.